This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Israel ratchets up offensives in Lebanon and Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr on assignment with the Detroit Lions. Lisa Mateo with us as well this morning. Arian for the new GM of the New York Jets. I think Mohammed.
Somebody.
I mean, you're at the University of Cambridge, and I mean, it looks attractive.
But no, you can come back to Jersey, go right back to
We'll
Florida
have
Park.
to see.
We'll
New York
take
Jets
care of
with a few jobs. Does Rodgers play next year?
I don't know.
What's the
It's a
expert opinion on
disaster
this?
over there. I have no idea what's going on over there. But in Florham Park, New Jersey today, I don't know what they're doing.
Okay, well,
No
we'll see.
idea.
Your New York Jets update here at the
There you
top
go.
of the show. Lots going on. Lots of politics going on in Washington. We'll look at that. Michael Darda with us for a full half hour. We start strong in moments with Robert Teeter. We'll consider Tarjay. I think it's a sport. Lisa will tell us about that. We say good morning on YouTube. Subscribe to YouTube podcast, growing each and every day. I'm learning about YouTube podcasts, like
Sure.
Joe Rogan's at the top.
Yep.
We're close, but
He's
we're
a
no
player.
we're no Joe Rogan.
No.
I mean, it's
We
all
can
there is
aspire
to
to
it.
be that, I guess.
But YouTube podcast growing each and every day. Just put it out. I said, there it is. YouTube podcasts, and you search Paul Sweeney, and boom, it's right there.
Pops right up.
It's as good as that. Good morning on your commute as well across the nation. Let's get right to it from the Interactive Brokers Studios. The Bloomberg Business Flash is Lisa Mateo.
And we've got futures advancing. This is Wall Street recovering from that round of volatility after the escalation in Russia's war against Ukraine. We have NASDAQ futures up 0.1%, 31 points. Dow futures up 0.1%, 84 points. S&P futures up about 7. We have the 2-year yield 4.30%. That's up 2 basis points. The yield on the 10-year 4.43%, and that's up 3 basis points. To currencies, we have the dollar up about 0.3%. Japanese yen weaker at 155.87 against the dollar. We have the euro weaker, British pound weaker. Bitcoin set another all-time high right now. Bitcoin at 93,629. Over on the earnings front, the attention turning to Nvidia reports after the close. Shares right now, they're up about 0.3%, set to deliver another blowout earnings report, but still some uncertainty over whether it can ramp up those supplies of its latest chip lineup. We shall see. And yesterday it was Wal-Mart. Today, Target opened its books. A weaker third quarter picture. Shares are down about 18%.
Wow.
It trimmed its full year earnings outlook, build up in inventory. That really hurt profitability. And U.S. consumers, they say they spent less on those non-essential items like clothes and also home products. We're still awaiting results from TJX and Williams-Sonoma. We'll keep you posted. That is your Bloomberg Business Flash. Tom and Paul.
You walk in the door, what's the difference between Costco and Target, Lisa Mateo?
They have a lot of this. They both have the grocery. They both have the clothing. But it's just the different, bulk compared to
Come
regular.
on, Costco's killing
But
Target.
Walmart had a good quarter,
But
so
Walmart
I
had a good
question
quarter, but Target
what's
did
it between
not.
Walmart and Target? Is Target as big grocery as Walmart is?
They both have, yes. They both have the
Okay.
similar grocery. I think Target is more along the, for me personally, I just know because my daughter goes there for beauty essentials. Like their beauty, that kind of thing is big for it. But I don't know. It just did
Interesting,
not do that well. Those clothing,
Stock
home
is-
products did not
Does
do
your
well.
daughter have her own bathroom?
She does
Do
not.
you go in there, do you go in and observe the chemicals? I walked in the other day
It's
and
a lot.
observed the countable. I couldn't count that.
No.
The chemicals.
It's a whole routine.
It's
in
a
the morning.
routine.
It's a
Very
routine.
good. Well said.
It's a regimen.
routine.
Yep.
Beauty lineup.
Paul Sweeney and I and Robert Teeter are not doing the
No,
beauty
we're not.
routine. We start strong today with all that's going on within the equity market. Futures up even with the target news of VIX 16.20 with Robert Teeter. I want to go back to Walmart. You have various parchment and decades of experience. You own Walmart, right? Mm-hmm. How can a retailer trade at a 35 multiple?
Yeah,
You're in CFA 101. Explain.
Well, I have to be careful on my single stock commentary, but those companies that have consistently been excellent at execution, at profit margin management, and at navigating this very complicated world that we live in through the pandemic through changes in import strategy, et cetera, they're just masters of logistics. And the news yesterday, I think from Wal-Mart, was interesting in a macro perspective in that they called out in the report purchases from higher end consumers.
Yep.
And that's not necessarily something to be excited about. And in past days, that's been a signal of consumers sort of moving downstream, putting more value on saving money. And so that's something that we have to keep an eye out for, whether we're getting any signs of caution from the consumer more broadly and not just at the lower end.
Robert, 2 weeks ago today, we woke up to a new president and what we now know is going to be a new Congress. Did that change the way you guys look at investments, stocks, bonds, all that kind of stuff?
It will change as we move forward and start to get some certainty on policy. So one of the things that I think will be really challenging in the next few months is that we're going into an environment, I think, that's very macro-oriented with a lot of uncertainty, and will only very slowly be gaining certainty on how all these things play out. So there's the instant knee-jerk reactions around, the favorable things, tax and regulatory, that I think provide a boost to the economy, provide a boost to earnings, and then there's been a knee-jerk reaction out of the bond market on the negative side, which is maybe deficits go up and yields stay higher for longer. So we have a lot of uncertainty around that. Markets seem to have interpreted it pretty quickly, but things will become a lot more clear as policy actually gets implemented, and that will take some time.
We just finished up, or in the process this week of finishing up an earnings cycle here. Was it earnings good enough to kind of support this market here? Because a lot of folks are concerned about valuation.
Valuation is definitely a governor in the short term here, I think. We've got, any type of valuation metric you look at is basically in the top decile or top 20% versus the long-term history versus last 30 years. Sentiment has been very positive as well. So looking at bullish readings or exposure, also in top 10, 15%. Versus last 30 years. So I think that's a bit of a governor until we get out a few more quarters. I think this is one of those environments where stocks have to grow their way into those valuations through earnings gains. We'll see what happens on the policy front. Again, equities seem to have interpreted it all very favorably. That might come through, but that could take some time as well.
Off the 73, 74 recession, and I'm going to do it to music. I think Bob Seger.
Yep.
Bob Seger's coming out of Detroit, and there was, the Carter malaise. There was a grayness over America. I think a huge body of people in this bull market don't remember bull markets like this. Right. Is there a body of people out there that just don't understand a bull market feeds on itself and sustains?
Yeah, it's a great question. There has been this odd divide, I think, in again, even with that bullish sentiment reading that you see, there are lots of people out there who have resisted this bull market all along the way.
Yeah.
And until recently, a lot of it has been driven by earnings. Now we're starting to get a little bit of that enthusiasm coming back in with the valuations we've seen in sentiment. So maybe you're pulling some of those people into the market now, thrown in the towel on being bearish and recognizing that, the world's not coming to an end. We've got a pretty stable growth backdrop. And that's good for earnings. So,
speaking of earnings, we've got Nvidia after the close here. What's your feeling here about this technology play, this AI play? Is this still the leader of this market?
Well, it is, but I think attention should start shifting because we have the first wave, in my view, is these chip manufacturers, and that's still happening, and Nvidia is still, of course, critically important. You have a second wave, which is implementation, and all the companies building out models and using things like a Microsoft who are starting to generate some earnings out of AI. But I think the more interesting development will be the third wave, which is when companies are adopting these technologies to boost profit margins. We're seeing some signs of it. I do a lot of work on transcripts and digging out every usage of AI. Are there real numbers attached to it? And that's the really important part.
Help me here. I'm in trouble. Anurag Rana calls me up.
Yep.
We got him on today with Mandeep.
Yep.
Anurag's doing this ginormous AI panel at Bloomberg today. Calls you up and says, "Hey, Tom, you know everything about AI." Fooled him again. I'm interviewing Ellie Greenfield of Adobe today, who's like Good Morning Brown University, like Mr. Techno Scientist. What's the question you would ask Ellie Greenfield, scientist extraordinaire with Adobe today?
Yeah, that's a great question. So the question I would ask is the thing that I want to know, which is I suspect this is going to be an incremental process rather than an overnight process.
An iterative process.
Yes. And so while we don't know the exact destination of how these things will be used, I'd love to know the magnitude of 5 years out. How big of an impact do we think we'll see?
Can you come back at 8:09 a.m. so I can get a second question from you? We'll have to see. Robert Teeter, thank you so much. Greatly appreciated. this morning. Robert Teeters, Chief Investment Strategist at Silvercrest. Okay, can we have a John Farrell moment?
Sure.
He's busting my chops, Robert, about the Dow Jones Industrial Average. I don't think it's ever been this skewed. Goldman Sachs makes up 8.3% of the Dow because it's price weighted. Microsoft makes up 5.9% of the Dow. Verizon, Cisco, Coca-Cola, and Nike make up 1% each or less of the Dow. It's a wacko. I'm a big fan of the Dow just because of it's what we do as kids. But it's never been, Paul, more of a fiction than it is right now.
I know. I'm looking. United Health every day seems to move the Dow Jones Industrials. So, John Farrell, he's on this. He's just not going to.
He's correct.
He's correct. He's not going to.
I love busting his chops about it. He goes mental. But,
exactly.
It's like the Italian football team. They lost to France.
Did they?
Yeah.
That's a shame.
I don't
know what's happening.
I told them the French were taller. That didn't go over well. With our news in New York City, John Tucker.
All right, Tom and Paul, thanks. Vladimir Putin willing to talk with President-elect Trump about a ceasefire deal in Ukraine that could roughly freeze the war along the current front lines. Let's get more from Bloomberg's Oliver Crook.
There's room for negotiation over carve-outs over the 4 regions of Donetsk, Luhansk, Zaporizhia, and Kherson, and that we also know that they're open to withdrawing potentially. So this is the Russians talking about potentially withdrawing from small patches of territory in other parts of Ukraine. Now, another point that Putin will insist on, is that Ukraine abandon its ambitions to join NATO. Again, this is potentially closer to a wish list from what the Russian side wants, but it is significant because if it is accurate, this is some of the first sort of concrete sketches we have heard from the Russian point, and potentially a sort of opening negotiation discussion.
Bloomberg's Oliver Crook says Joe Biden's decision to allow Ukraine to use long-range missiles inside Russia could complicate any settlement. In another development, Bloomberg News has learned the U.S. decided to provide Ukraine with anti-personnel landmines to stop any advance of Russian troops. And President-elect Trump adding 3 more names to his cabinet, tapping Cantor Fitzgerald CEO Howard Lutnick as Commerce Secretary. Linda McMahon, the former World Wrestling Entertainment CEO and Small Business Administrator in the first Trump administration, is the President-elect's choice to lead the Education Department. And Trump has also named Mehmet Oz, the celebrity doctor, to lead the Centers for Medicare and Medicaid Services. More of that pick from Bloomberg's Wendy Benjaminson in Washington.
He was a professor of medicine at Columbia University, but he has spent a good deal of his career in the last 10 years promoting, sort of fringe medical things, a lot of wellness stuff that isn't quite, on the beam with a lot of the medical community.
That's Bloomberg's Wendy Benjaminson. In a cooling labor market, recent college graduates among those feeling the chill the most. The gap between the unemployment rate for recent graduates and the overall rate for Americans with a college degree has widened to 2.8 percentage points in the month of September. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Can I get you a cough drop?
No, I'm fine. I got.
Okay,
Lisa's got
worried.
the same
I'm worried.
thing. She's just more delicate about it. Everybody's got this. Like half my afterthought, half her school's got it. And it's just I'm like. I don't know. I need. I don't know. A beverage of my choice. I need a Tang mimosa. That'll do it.
Yep.
Sweeney Wheelhouse. Let's do it now and do it later. $7 billion bolt out for Comcast makes sense.
Probably feels like a good bank, bad bank situation for me. The cable network business used to be a phenomenal business,
but
now
money.
It's not.
It makes profit, right?
Yeah, it does. But the subscribers are declining because of cord cutting. So let's get it out of the big Comcast and set it off on its own.
Okay, we'll see. We'll do more of this with Paul Sweeney, looking at the media wars. Futures up 9. Watch Target. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have futures advancing. This is after reports that Moscow may be open to negotiations on halting the war along current battle lines. We have Nasdaq futures up 0.2%, 49 points. Dow futures up 0.2%, 88 points. S&P futures up 0.1%, 9 points. The 2-year yield at 4.29%. That's up 1 basis point. The yield on the 10-year, 4.42%, and that's up 2 basis points. To commodities, gold lower at $2,629 an ounce, but UBS says it expects gold's going to rally to $2,900 by the end of next year. As far as oil, we have Brent crude higher at $73 a barrel, WTI crude $69 a barrel. To currencies, the Bloomberg dollar spot index up about 0.3%. We have the Japanese yen weaker, euro British pound weaker. Tesla, it's really been on this quite a ride since the election. Well, one person who reaped the rewards, its chair, Robin Denholm, sold $35 million of shares in that post-election surge. And shares of Comcast up more than 2%. You heard it. Sources say it plans to spin off that cable TV channels, including MSNBC, CNBC, USA. We'll have more on this in our newspaper segment at 7:45. A little plug there. 7:48. Tune in.
What is this now?
The Lisa Mateo
hour.
Got to get the selfless plug in.
Yes.
And then,
Are you done?
No, just want to check.
Okay.
Target shares down 17%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business
The
Flash.
greatest thing about our glass-walled studio is when Lisa says no, it sounds like we're in the kitchen. No!
Exactly.
Sorry.
No! Lisa Mateo with newspapers, hugely popular. We'll do that for you in half an hour as well. Steve Auth joining now. He's got a title, Executive VP, CIO, Equities, Federated Hermes. Thrilled that he could be with us today on the markets. Okay, Steve, I got a big stock. It's at best growing 7% revenues. It's sort of like 4 or 5% revenue growth. Above net income, it's making 6-7 cents on the dollar. Paul mentioned this yesterday. It's making 3 cents on the dollar net income. Free cash flow before the pandemic was $17 billion. It's now less, $15 billion. Why in God's name is Wal-Mart trading at a 35 multiple?
Well, maybe you call up Target and ask.
I mean, Steve, I just don't understand how a single-digit juggernaut like Walmart clearly deserves a premium, but a 35 multiple on Walmart, how did we get there?
Yeah, I think the idea here, Tom, is that they're gaining market share in this space. They're becoming a kind of Amazon lookalike. And it's all their kind of non-retail businesses that maybe provide some of the forward growth. Look, it's hard to defend the multiple on Walmart. I get that. And, as a value guy, we'll probably be looking pretty hard at Target today, down 20% on an inventory mess up, basically. But, the story on Walmart's a pretty positive one if you look at it. Whether it's worth 35 times or not, I don't know. That's a little bit rich.
Yeah. They put out yesterday, Paul, some of their online stuff was well above 25% growth.
Yeah, exactly. Yeah. Steve, 2 weeks ago, we all woke up to a new president-elect, and now we know we've got a new Congress. Has that changed the way you view the equity markets for Federated Hermes?
Well, we were anticipating that this was possible. And so, we had a big meeting scheduled for the day after the election to see how we might shift our balanced portfolios around. And we concluded we're probably in pretty good shape. I mean, we were sort of playing, as you know, for the broadening out trade, small caps, value stocks, and a higher level overall for the market. And I think that is very much reinforced by the outcome. We felt that there were a lot of positive forces for that trade already. You get the economy kind of potentially hanging in there pretty well. Inflation way below where Fed funds would justify at the level they're in. So you got interest rates coming down. And importantly, the yield curve reinverting, I should say. And, very important for small cap companies that finance themselves shorter term. And now you've got this whole deregulation, lower tax play coming out of the new policy mix, which we think is positive. We actually also felt, frankly, although, common thinking is that markets like stalemate in Washington, we thought in this case that's probably not a good idea, because in this case you actually have a major policy change coming if you have stalemate, i.e. the tax cuts from 17 roll off, and you've got a huge tax hike ahead of you if the government can't decide what to do. So now you've got the likelihood that those tax cuts get extended. That's another market positive, especially for the smaller cap stocks that get affected by the ordinary income tax rate.
Steve Roth, it's a season where everybody comes out with 40-page year look-ahead reports. I think they're a marketing exercise as well. Do you get any value out of strategist year-ahead guesstimates?
No. We know most of them, as you could guess, Tom, and we have them in our offices, and we ask them to put away their forecasts, and we really just have a dialogue. I do get there's some really smart people working on Wall Street on the sell side, and if you get underneath their forecasts and start going back and forth with them on the drivers of it, we find that helpful, that dialogue. But we do a lot of our own work, obviously. I mean, we've got 160 investment analysts working in our organization. So, we do a lot of our own work on where we're heading.
Steve, we're going to get
We have targets ourselves, as you know.
Yep.
I mean, but we do it more to kind of suggest a direction as opposed to, a precise date and time that a market's going to hit a particular level.
Steve, we're going to Nvidia earnings after the close here. Talk to us about just kind of how you view kind of the big tech play here versus maybe thinking about more cyclical parts of the market here, if in fact we're going to get maybe a little bit stronger economy here.
Yeah, look, I mean, Nvidia is a monopoly generating enormous cash flow, selling to some of the most well-funded companies in the world who themselves are existentially challenged if they don't buy Nvidia's products. So in the near term, it's a pretty solid story. They've got this Blackwell thing coming, which is going to probably drive another leg of growth there. So I get it why it's such a popular stock. And I even have analysts that work for me that make the case on a PEG basis, which is a technical term, but just looking at what you're paying relative to the growth rate near term, Nvidia still looks pretty attractive. I think the debate among long-term investors is, are they selling razors or razor blades?
Okay.
And it makes a big difference. Yeah,
I'll go with that. We'll continue that forward. But Steve, are you extending out your terminal value for the Mag 7 on a PEG basis where you're rationalizing, say, Microsoft not 3 years out, but 5 years out?
Well, Tom, I think you almost have to do that now with these stocks, and that's why we don't see them as leading the market. We don't disagree. They've got incredible fundamentals, and they are cash flow compounders. They're very unusual. We're beginning to think of the market, and if you look at our 7,500 target, which again is a directional idea for 26, we're thinking of the market as having two multiples. One for the Mag 7. And given the fundamental story there is very positive, I think you could make the case they're probably worth 25 times earnings. And then one for the broader market, which is probably worth around 19.5 times 19. If you look at, at low rate environments, 3% Treasury bonds, which we think we're heading towards eventually by then. If you look at history, peripherally around a 19 multiple on stocks makes sense. So when people say the market's expensive, they're mixing up the fact that they're kind of combining these two pieces. When you add them up together, you do get to like a 21.5, 22 multiple on equities. But we don't think of it that way. We think of the everything else and then these incredible cash flow compounders.
Steve Roth, thank you so much. Greatly appreciate it. With Federated Hermes there on Walmart, on Target, and of course on valuation forward. Futures up 9, Dow futures up 101. VIX status 16.17 of the VIX. We're on YouTube. Subscribe to Bloomberg Podcast. Good morning, 99.1 FM, Washington. From New York City, Bloomberg 1130 AM, our flagship. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Lisa Mateo. Futures, they're advancing. This as traders look ahead to Nvidia's results later this afternoon, a possible fifth consecutive quarterly earnings beat. We shall see. Right now, those shares up about 0.5%. We have NASDAQ futures up 0.2%, 45 points. Dow futures up 0.2%, 113 points. S&P futures up 0.1%, or 10 points. We have the 2-year yield at 4.30%. That's up 2 basis points. The yield on the 10-year, 4.43%, and that's up 3 basis points. We have the Bloomberg Dollar Spot Index up 0.3%, with the Japanese yen weaker at 155.78 against the dollar. Euro, British pound weaker. And we have Bitcoin, new record high, 93,710. Few companies making news. Foxconn, one of the largest suppliers for Apple, sources saying it raised $1.1 billion through a 3-year loan. And Qualcomm, the world's biggest seller of smartphone processors, expecting a push into new markets like automotive chips to generate an additional $22 billion in annual revenue by fiscal 2029. Be sure to tune in 11 a.m. Wall Street time. Qualcomm's president will join us live. And shares of Japanese retail giant Seven & i Holdings up 6%. Local reports the founding family of the company is looking to complete a deal to take it private by the end of February. And finally, shares of Target, they are down about 17% after it trimmed its full-year earnings outlook. That is your Bloomberg Business Flash. Paul and Tom.
We'll do more on that. Paul knows all sorts of big box people that can wax philosophical about Target. We say good morning. Good morning, Colorado Springs, Colorado.
Whoa.
Thank you for listening on Apple CarPlay, Android Auto. When you're a young cherub and you go to Colorado College, you study physics, which is what David Malpass did. Joining us, the former president of the World Bank, iconic at Bear Stearns years ago. David Malpass darkens the door this morning.
Brightens the door.
Casey has yet to concede in Pennsylvania. Tuberville, the football coach, dragged you into the Senate. He said, we need Senate testimony from David Malpass on, global economics and all that. You're one of the few people I know that's actually been in the trenches in the United States Senate. Do you see with this new administration, David, with your affiliation with the Republicans, do you see a suddenness, rapid movement between the executive and the legislative branch, or will it be slower and more iterative?
Hi, Tom, and that's a great question and issue. I think it'll be pretty fast because there really is a mandate from the country to bring change.
How do you see a mandate? I've got Vice President Harris narrowing it down to 50-40. It's something like 238,000 votes in 3 swing states. I got a guy in the San Joaquin Valley right now, Republican, winning by under 300 votes. If the Democrats take west of Fresno, it's one more Democrat in the House. It's not a mandate, David.
I beg to differ. So it means all 7 of the swing states were won. And if you look
Agreed.
at all the demographics, in other words, if you parse it by age, if you parse it by skills,
right.
You get people wanting change. And so that means the Senate is going to let's come to your question. There's a turnover, a very important turnover of the majority leader, and the staff on all the committees turns over. Mm-hmm. And so there will be people whose lifeblood is not regulating. And so that means a big change in how the Senate operates. Of course, it's the deliberative body, and it'll take time to get some stuff done. But I'd imagine there's going to be a tax movement on the tax front very quickly, of course, on energy and on trade, where the system is broken. So you'll see all of that moving, month by month, pretty rapidly.
What do you think of some of the president's cabinet nominations to date? What have you kind of sensed?
I think they're great, but what you see is him wanting change. And so that, to me, is the signal coming out of each area. Put strong people in that want change. Look at the energy pick. So Chris Wright, Burgum are really strong. Lee Zeldin, and these are the energy side that can make, if you think about how do you make America strong again, and this is peace through strength. Where do you get the strength? From production. How do you do that? You get the energy sector going so that you can build all the other things that go into an economy.
Yeah, but aren't we like the #1 energy power in the world now, bigger than Saudi Arabia? There's an oversupply. McGlone says a barrel of oil is going to $12 a barrel. I'm kidding.
You bet. Well, stranger, remember it went to $10 a barrel in the year 1999 and 2000 when the dollar was super strong, overly strong. So I don't know that we want it that low, but it would be good if it comes down. And the bigger thing is the U.S. could be doing so much more. You just named parts of the world that are plentifully supplied, but there are huge parts of the world that don't have enough energy. And think of the craziness that we've got because of the lack of pipelines. We've got the energy, the LNG goes through the Panama Canal. It's such a wasteful use of the water. Panama Canal is driven by free-flowing water that comes from rain, and you wash the ships down both sides of the canal, and you're doing it to get LNG to Asia from the east coast.
So what
of
do
the
you want to
United
do?
States.
Build a harbor overlooking San Francisco Giants Stadium?
There needs to be some way to get energy onto the west coast of either the U.S. or Canada. They're building one into Mexico, but how does that really help the U.S. if you have to go down through Mexico to get your energy out of the hemisphere?
It's too much geography with David Malpass. Paul, save the conversation.
Speaking of down in that part of the world, the G20 is just finishing up down in Rio here. How do you think President-elect Trump views the entities, organizations like the G20 and that try to think about things on a global basis? How do you think he anticipates engaging?
I don't know how he thinks about it, but it should be clear to everyone that the globalism isn't working. This is the giant conferences. Think of the literally tens of thousands of people. I've had to go to these conferences. We recently saw the one in Baku. Think of the absurdity of having the climate conference in Baku, Azerbaijan, which is the conduit for Russian oil coming under the sanctions out into the rest of the world. So you've got this, and literally it's 10,000 people from that are all trying to get government contracts. So it's a climate industrial complex, just like the military industrial complex that's so expensive. You need to have strong defense for the U.S., but you need to have it in a way that's competitive in the world.
David Malpass, with the former president of the World Bank. We're thrilled that he could join us this morning. We welcome all of you on your commute across the nation, and of course on YouTube. Subscribe to Bloomberg Podcast. I have literally on the desk at home, Lighthizer, No Trade is Free. I'm going to read it cover to cover just to get an understanding of Lighthizer economics. You're at Colorado College lecturing EC 102, Macroeconomics. David Malpass discussed the efficacy of tariffs.
The system is broken in the world. It was set up at a time before China was the #2 world power. You had a concept in the 60s and 70s that somehow there could be kumbaya, that everybody could come together
Everyone
and
will
form
agree with
a
that.
deal and everybody lower
Vice
their tariffs.
President Harris would agree with you.
And it's completely broken down because you have this giantly aggressive commercial power that's not playing by the rules on intellectual property, on their overcapacity of manufactured goods. So it's a taking away markets from the rest of the world.
Do we need tariffs that are gradual and marginal, or do we need the jump condition that the president-elect talks about, a magnitude of tariffs that we haven't seen in generations?
You need to get the world's attention that what they're doing is broken. I don't know if you saw, but President Xi was in South America last week, and he was making the case to all the other world leaders to go gradual. And so China is kind of bidding for time. They're saying, oh, this is going to, we're moving in your direction. And so whether the rest of the world buys that, and China often pays for it with contracts, with gifts that can be shared in families, and so how do you stop that and really get onto a new wavelength with China and with the rest of the world in fairness?
Should the U.S. approach to China be one of engagement or one of, just trying to really step back from China? How do you think the approach should be?
I think there has. So for too many years now, China's been getting what it wants. I saw that in the world conferences. They really are winning on the soft power, and so you have to take that back because the U.S. has all the ability to do this. It just has been choosing not to do it. You know, we've been trying to get peace through weakness. And so if you switch to peace through strength, China is going to change its side of the discussion as well. I mean, they follow very closely what's going on in the U.S. and will be responding to it. So then you've got to say, okay, we've got a bunch of problems. Here's our list of problems. You're producing too much steel with too much coal and claiming and then pushing climate agenda through the Paris Agreement that you're not complying with. We don't like that. Intellectual property, you're stealing. You've never let down on stealing the intellectual property.
David, I got one final question with great respect. Tom Nichols, The Death of Expertise, profound book. I interviewed him when it came out. We're trying to get Mr. Nichols on again to talk about it. This is an administration. David Malpass has the best English skills of anyone I've ever known on Wall Street. You and John Riding were prodigious in your economic output for Alan Schwartz at Bear Stearns. Your physics, Colorado College, you're the real deal on a conservative tone. Some of these people have zero expertise. What would you say to the president-elect right now if these people are pushed aside by Senate?
Well, I don't think that'll happen, but I think what the president can see is that he's clearly he's got a powerful path. That's taxes, energy, that's making
Why
America
is he
strong.
running then from expertise? Because there are conservatives like you that have their heads screwed on.
A problem is expertise often has meant you're inside the beltway with their models. And so we really have to have an upheaval where you shake it up with people that have views from outside.
I got to make some news today. Have you been called by the president or by Susan? Are you going to serve within the Trump administration?
No news from
Come
me.
on, David.
No news.
Okay, David Malpass, thank you so much. Formerly with the World Bank and, of course, running within public office within New York State. For the Senate, I believe it was years ago. Did I do that okay? You had a pickup truck and everything,
Senator
right?
Gillibrand. I had my winner all around the
You
state.
survived, okay.
It's a great state.
David Malpass, thank you so much. What I noticed, Paul Sweeney, about, well, it's okay. You know, get Mr. Malpass out here. His entourage is waiting for him to go. Futures up 9, Dow futures up 107. Lisa Mateo, we're looking at Target, and I'm sorry. It's, you know, a really significant thing to say the least. I mean, they missed on an inventory build. Is that the simple answer?
Inventory build. They just can't sell a lot of those like non-discretionary items, things like clothing. That's not doing so well there. So that's one of the issues. But yeah, you've really seen it. We're just getting TJX out too. They had this a better outlook, but the problem is that those Target earnings, I think, are just starting to affect others, like Williams-Sonoma is due out, and their shares are already down. Yeah. So it's kind of this trickle down effect.
Yeah, but you can't. Those are I mean, TJX. Everybody's in awe. Look at the chart. It's like extraordinary. It's trading like Nvidia. Yeah. It's a 119. It's trading up a little bit. Williams-Sonoma. Can you get out of there for under $300 on the website?
No. It's hard to even get to the back of the store. I mean, you walk in, there's so many things. You're like, oh, I'll take that. I'll take that. Yeah.
So
that's how they work it.
Dangerous stuff. Thank you for the comments. YouTube lighting up like a candle, and also social media with Mr. Malpass's appearance, and it's a heated debate across America.
But we didn't get any new news out of him about a potential.
No, come on.
You tried.
You know that you just at some point here. Yep. He's going to be out there. We have to re-promote this. I just got a memo from Sparta. Okay. Promote Mateo and newspapers. Coming up, Lisa Mateo and the newspapers.
Yeah, exactly.
Okay.
It's important here.
We said that 3 times in the first of the hour. That's good. Futures up 10. Nice lift to the market. Nvidia this afternoon with Carol and Tim. From New York City, Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures pointing to a higher open. This is after Russia said it was ready to talk with President-elect Donald Trump about a potential ceasefire with Ukraine. Traders, they're also monitoring Trump's administration picks. We have NASDAQ futures up 0.2%, 48 points. Dow futures up 0.3%, 130 points. S&P futures up 0.2%, or 11 points. The two-year yield, 4.30%. That's up 2 basis points. The yield on the 10-year, 4.43%, and that's up 2 basis points. We have the Bloomberg Dollar Spot Index up 0.2%. We have the Japanese yen, euro, British pound weaker, and we have Bitcoin up more than 1% at 93,000. Now, we heard about Target cutting its profit outlook. Those shares down 18%. We continue discount retailer TJX, home goods, TJ Maxx, Marshalls. It boosted its annual profit outlook. Its shares were down about 0.5%, now up about 0.5%. We're still waiting for Williams-Sonoma. Their shares right now down about 3%. Few companies making news. Salesforce planning to cut workers at OWN. That's a data management startup that it acquired for about $2 billion. And labor leaders at Volkswagen, they offered £1.5 billion in additional cost cuts. That's to avoid factory closures. That includes lowering shareholder dividends and also suspending portions of bonuses. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Huge response to this discussion with David Malpass. And the thing that, we're really not an opinion, folks, of giving our opinion. I mean, that's not what Paul and I do, and that's a Bloomberg heritage from the founder of Bloomberg News, Matt Winkler. But I take real issue with what I'm seeing percolating, that there was a mandate. I get it, there appears to be a trifecta win. Republican executive, Republican Senate, Republican House. But with all the vote counting, one district I looked at in California, even now only has 96% of the vote count. There's still, it's as you've pointed out, Paul, it's still going on.
I'm just shocked that we're still in this day and age have that kind of or lack of technology there. It seems like there should be some app somewhere that could accurately and timely count ballots. Maybe we'll get there someday.
You'd think so. Futures up 12. It's a modest lift to the market. I mean, there's some noise out there. Is TGX a Dow component?
I don't know. I can't imagine, but boy.
It's different than Target.
Yeah, it is, absolutely.
Yeah. That's all there is to it. I should point out dollar stronger, very importantly today. Yen rounded up 156, euro 105.67.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
The daily look at the front pages. It is the Lisa Mateo Hour. It's brought to you by IBKR. With Interactive Brokers Forecast Trader, you can trade your views on key economic and climate indicators. Visit ibkr.com/forecast and get started today. ibkr.com/forecast. Get started today. Thank you, IBKR. Lisa, please.
Okay, I've got a lot for Paul today, so keep your hat on, all right?
Ignored me. Fine,
this one was in the New York Post. Just when you thought you haven't heard of Shari Redstone, her name in a while, here it comes.
Yep.
They said that she paid off nearly $200 million in debt from cash that was mostly fronted by Larry Ellison. Now, this was a loan from back in 2018. She made the full payment. The balance wasn't due until May of 2025, so she made the payment, but it was $186 million. Last month, it was owed to creditors of National Amusements, but this is just the latest thing. So they're saying Larry Ellison forked up a big chunk of the cash for her.
I think Shari Redstone and her family made the decision 2 or 3 years ago. This business, the Viacom Paramount business, is not good long term. Let's just get out, sell today. She got the deal done to Skydance, and she had a short-term liquidity problem here. And Larry Ellison, who's backing his son at Skydance, says, "I'll take care of that problem for you. Here's the cash." And so that's it. She'll just ride off into the sunset and take her $350 million and do what she does.
So the zeitgeist is they bolt off from Comcast, MSNBC, CNBC, and the rest, Oxygen. I love E. I watch E like 24/7.
Look at you.
Okay, but they can't merge with Shari Redstone's CBS. There's no way Washington
the cable, actually, the cable networks could. The broadcast networks could not. So NBC,
Why?
CBS, because there's only 4 broadcast networks, so they won't let 4 of them merge. But you can take some of the cable networks from like MSNBC, USA, and you can merge that into the new Paramount, whatever it is, because those are just smaller networks. So,
Okay.
and that's story number 2.
Okay.
Yeah.
Next.
I didn't even realize that. So yeah, there's MSNBC, CNBC, USA.
But not Bravo.
But not Bravo. You got to keep the housewives.
I guess.
Okay, explain why.
The housewives. It's huge.
Is it because it makes money?
It makes money. Peacock streaming TV also, that's not part of it. So that'll stay
Yeah, I
with
get
the
that.
parent company.
So I'm not
but
sure,
they're
as
keeping Bravo.
a media investor, why would I buy this new co? Because I'm getting a lot of second-tier cable networks that are facing the cord-cutting challenges that all of traditional linear TV is facing. Where's the growth? What's the story? So this is a bad bank, good bank situation. I think Comcast is simply saying, we've got a lot of good assets at Comcast. Let's keep them in Comcast. The stuff that is not so good, we'll spin it off into a
But
new
Paul, they get 38.8% debt at Comcast. Is this where they dump all the debt?
No, I
on
think
the spinoff?
No, their debt is actually
polices
fine.
that?
They actually have a very good balance sheet. Their net debt to EBITDA is fine. They have a great balance sheet. Actually, it's a strategic asset of the company. But they're just simply saying, we think our stock is weighed down by these cable networks, and so let's spin them off into a separate company, get it off of our balance sheet, so maybe our then existing Comcast can trade higher. So
Now,
I
the
think that's
journal's
what
saying
they're
it could produce about $7 billion in annual revenue. Do you think that's about? Yeah.
It is, but is that revenue growing? And I would argue it's not, or very low.
Is this
very
a
low growth.
synergy thing?
I think it's simply a good bank, bad bank thing. I just want to get some of these assets that I know my investors do not like and get them out of my company and put them as a standalone company. So
Next.
Okay, we're moving on to Elon Musk's X. Apparently, it needs to boost advertising revenue. So it's turning, this is from Business Insider, to an ad tech company called PubMatic. They're joining Google, InMobi. They're these third-party vendors that allow them to sell their ads. But the thing is, it's different for the company, right? So before Musk had to take over, Twitter broker deals with advertisers directly. So now you see this shift as they're turning to these like third-party vendors to help sell its advertising. So it really needs to make some money, obviously.
When
That's
does
the
their
thing.
debt, Paul, do you know when, like when he affected this transaction,
Yep.
there was lots of debt, Wall Street, Morgan Stanley, I think, was involved transactions, right?
this is all on his personal balance sheet. And so now, this is just an opportunity for him to try to say, hey, I got to generate some revenue because my advertising revenue is just not growing. We don't know it because it's not public, so we don't know what the revenue is.
Okay,
But
it's not public.
but I suspect that there are a lot of advertisers that backed away from X for a variety of reasons, and this is just a way for them to try
Yeah,
to
I'm looking at the
re-engage.
PubMatic website. I can't be on that website. It's too cool for school. Next, one quick one. Get in.
Okay, quick. Barbenheimer, you remember the success it did. Well, this weekend we're going Glicked. Okay,
I saw this.
Gladiator and
Really?
Wicked. I guess Wickiator doesn't quite have the
What do you
same ring
think?
to
Come
it.
on, what do you think?
I think it's going to be phenomenal because it's the same thing. You have two completely different audiences. They had the Barbie and the Oppenheimer.
Okay.
Now you have the Wicked and the Gladiator.
Hollywood's
too.
cheerleading at the Telegraph in London
Yeah.
crushed Wicked. Just
Really?
crushed it. I don't know. I don't have an opinion.
But it has the
other
big
way.
stars, Ariana Grande. Like it has that pull to it. Gladiator itself, I already bought my
It's the
tickets.
Rock
Full
and Roll.
disclosure.
What a shock.
Who's the gladiator this time?
My husband is a Gladiator
Who's
fan.
Russell?
Both of them are. Yeah,
Who's
yeah.
playing Russell?
Crow. Yeah, I don't know.
Russell Crowe. Oh,
No.
there's the new
The
guy
new
who's
guy.
playing
The new guy.
the younger, the
younger,
son
okay.
of the.
I'm
Yeah, yeah,
shocked.
yeah.
A younger
It's this
guy?
whole other story. Yeah. So.
Yeah. You've
But
already bought your tickets to
I already
Gladiator.
bought because it's been so long since Gladiator came out.
Paul
So,
Metzger,
yeah.
I'm told. Paul
Yep.
Metzger.
All right, you're on top of it, Tom.
Yeah,
Boy,
well,
look at
I'm
you.
not. Ari saved me
Oh,
once
Ari
again.
saved you, okay,
People
good.
think I know this stuff. Ari's in my ear. Hey, stupid. It works.
Well, hopefully that'll be a big box office.
They're
hit.
hoping.
Did
So
we
the,
give-
the estimates, okay, they plan that it'll bring in Wicked at least 100 million opening weekend. They're hoping Gladiator 2 could bring in 80 million. And that's kind of similar to how Barbie and Oppenheimer opened.
Okay.
But we'll see.
Did we give you enough time today?
We did. Thank you very much.
Lisa Mateo, thank you for the newspapers. We will do everything we can within the scheduling and, Gurr and Rio and all that to get the newspapers out tomorrow. Because people have been complaining. I get hate mail. I get all the hate mail.
I
They're
can't
like,
believe we actually preempt the newspaper segment.
Gurr in Rio or Lisa newspapers, you make the call. I mean, that's
Exactly.
basically what we're getting. The call I get is there's some challenging earnings out there, but the market lifts. Futures up 12. From the early 90s, Chris Whitley, good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions over Israel's war with Hamas continue to grow.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, and Michael Barr on assignment with the Detroit Lions. Lisa Mateo with us recovering from her newspaper report. We have a must-listen, stay with us hour on YouTube and on your commute across the nation. Matthew Lazzetti, Deutsche Bank, joining us later in the hour. Joining us as well, Anurag, Rana, Mandeep, Singh with their seminar. I'm part of their seminar today.
I am too, as well.
Oh, you are? I did not know.
They're putting us to work, yeah.
Okay, I'm glad one of your seminar will be intelligent. I'll be like, should we buy the new Mac? It's really intelligent. Michael Darda here for the entire half hour. We'll get to Michael Darda with Roth Capital here in a moment. We say good morning out on YouTube, building each and every day. What do? You subscribe to Bloomberg Podcast, Darda's dog. Mm-hmm. The Weimar under the gorgeous dogs.
Oh, are they? Yeah.
Yeah, I mean, they've subscribed. I mean, that's all there is to it. Good morning on your commute, Apple CarPlay, Android Auto. I was told again yesterday, Sirius XM's a huge deal.
Channel 121.
Do you have Sirius XM
I do.
in your car?
I've had it almost since day one.
Really? Very cool.
Yeah.
Very
for Howard
cool.
Stern.
I couldn't get it in the Nash. It just I can't get the digital to go with a Nash Rambler. Anyways, across your commute, good morning on the quarter, 92.9 FM in Boston, here at the flagship Bloomberg 1130 in New York. Snow to the northwest here in a couple days. And 99.1 FM in Washington as well. Bloomberg Surveillance this morning. We're brought to you by Cohn-Resnick Advisory Assurance Tax. Discover game-changing strategies to maximize value, optimize performance, and manage risk. Put your business at the forefront. And we thank Cohn-Resnick for charter's support of what we do here in conversation on economics, finance, investment, and international relations. Thanks for the many comments, pro and con, on David Malpass's appearance. From the Interactive Broker Studios, our Bloomberg Business Flash, with more airtime than us, Lisa Mateo.
More Lisa Mateo. Good morning. Futures right now still advancing. Wall Street recovering from that round of volatility after the escalation in Russia's war against Ukraine. We have Nasdaq futures up 0.2%, 54 points. Dow futures up 0.3%, 150 points. S&P futures up 0.2%, or 13 points. We have the 2-year yield 4.30%. That's up 2 basis points. The yield on the 10-year 4.42%, and that's up 2 basis points. To currencies, we have the Bloomberg Dollar Spot Index up 0.2%. We have the Japanese yen, euro, British pound weaker. Bitcoin set another all-time record right now. Bitcoin up more than 1.5% at 93,780. On the earnings front, attention turning to Nvidia. Reports after the close. Its shares up about 0.5%. Will it deliver another blowout earnings report? There's still that uncertainty over whether it can ramp up those supplies of its latest chip lineup. We shall see after the close. Over to Target, it opened its books and its shares, down 18%, trimmed its full-year earnings outlook, a buildup in inventory that really hurt profitability, but the company's saying they still remain optimistic about the holiday season. We go to TJX, TJ Maxx, Marshalls, Home Goods, third quarter earnings topped estimates. It raised its guidance. Shares are down, though, about 0.5%. And finally, Williams-Sonoma just coming in right now. Its shares were down. It raised its full-year outlook. Now its shares soaring up 23%. That is a Bloomberg Business Flash. Tom and Paul.
Was that the Sweeney household?
Could have been. Could have been.
You order napkins from Williams-Sonoma, you got to take out a loan.
Exactly. That's how they roll. Yep.
And the stuff that you use twice,
yes,
and then it goes underneath the kitchen.
Right. But it looks good. And you feel like you need it at the moment.
Williams-Sonoma lifts. We'll have much more on that today. This is a joy and particularly well-timed after our conversation with David Malpass in support of the new administration. Michael Darda with Roth Capital, and I don't think I've ever seen as political a note, Washington a note, out of Darda is what I've got in front of me. In italics, to simply keep current law in place, new revenue sources will be needed. Michael Darda, what do you expect in January, February, and beyond?
Hi, Tom. Thanks for having me on. Look, The administration and Congress are going to have to work through the confines of budget reconciliation. And that's really just a technical term for saying that they're not going to be able to increase the fiscal deficit outside of a 10-year window. And that means they're going to need some revenue in order to either make parts or the entirety of the 2017 tax law permanent, or if the idea is to cut new taxes, they're going to need revenues for that. And I think we know where those revenues are going to come from. The attempt is going to be to generate them from tariffs, potentially a fairly significant across the board tariff increase. And I think the notion that this is just a bluff or a negotiating tactic is simply incorrect.
Yeah, Greg Valliere really emphasizes that from AGF this morning. He says this is not a bluff. What do Trump tariffs do to the stock market?
It's a great question, Tom. I think we have some risks here because the equity market valuations are quite high on any measure. If you look at forward earnings estimates, which are quite optimistic, we're at a 22 plus multiple that's historically high. The so-called Buffett indicator that just looks at market cap or the stock market itself relative to the nominal GDP, we're at the highest level since 1929, which, by the way, was the year that Smoot-Hawley passed Congress, cleared the Senate the following year, and was signed into law. And that made it infamous because that was the beginning of the Great Depression. So I think we're playing with fire a little bit here if we're going to experiment with potential shocks to the supply side of the economy when equity market valuations are as high as they are. And the Fed has so far successfully soft landed the nominal economy. If you look at nominal GDP growth, we've settled into just over a 5% zone, and that's happened with productivity rebounding over the last 6 quarters. So anything that potentially disturbs the supply side with a relative price shock from tariffs or a slower growth shock to the labor force could end up being a problem for corporate profit margins in these super high equity market valuations that are in place today.
Michael, could you explain the math associated with tariffs? Is that direct revenue to the U.S. government, number one? And number two, do those increases in cost, do they get passed along to consumers and maybe cause of inflation?
Yeah, absolutely. So, I mean, the tariffs are simply a tax. They would be equivalent to raising sales taxes, but they're not across the board. So it's a narrow tax base relative to the total consumption tax base. So total imports of goods are around 3 trillion. There's been some discussion on the campaign trail of using tariffs to get rid of the income tax, and that's just not going to be doable because the tax base is simply not wide enough. So one principle of good tax policy is to have the broadest possible base with the lowest possible rates, and trying to raise a lot of revenue from tariffs does not meet that test. So it will cause distortions. The late great Milton Friedman, I think, put it best when he said that the problem with protectionism is that the beneficiaries are concentrated, visible, and vocal, but the costs are very diffuse.
Right.
And that's exactly right. So from that perspective, I think this is a risk to the market and the business side.
I like what George Will said in the Washington Post. He said, "What are tariffs? They're like putting a blockade around your own harbors." I thought that sort of summed it up in a nice vignette as well. Michael Darda, then, I want to talk the markets when we come back in Fed, but Michael Darda, are you advocating that people who are measured conservative, like John Tucker, they're in their retirement plan, they're days from retiring, that they lighten up on equities?
You know something I don't?
Well, look, Tom, obviously trying to time the stock market typically does not work out for folks. So I think we have to be really careful with that. A slow and steady approach is the way to go. Right. If John's very close to retirement, then I'm assuming that he's already got it all planned out in terms of becoming more conservative over time. But what I would say is this. I think these high equity valuations make a very strong case for value investing, which is, kind of gone by the wayside as we've been in the throes of this
Right.
AI tech frenzy over the last few years. And you could do a barbell approach. So if there's a
Right.
small portion of the portfolio that you are going to manage, and it shouldn't be the whole
Right.
portfolio, I would say defensives on one side. So if we get these rate shocks like we have over the last 2 months, that's a time to lean into the
Okay.
defensives.
Mike, let's do this, Mike. Feed the dog, and let's come back with Michael Darda here. Lots to talk about. John, I'm just noticing here, you're going to get a 94,000 print on Bitcoin. That retirement, it can happen this afternoon.
Oh, awesome.
With
Just
our
remember my
news in
password.
New York City, John Tucker.
All right, let's start with Vladimir Putin willing to talk with President-elect Donald Trump about a ceasefire deal in Ukraine that could roughly freeze the war along the current lines. Let's get more in this report from Bloomberg's Kevin Whitelaw.
There's some new willingness on the part of Putin to at least discuss something where there'd be a carving up of territory that would essentially reflect some of the current battle lines. And in return, Ukraine would basically agree to not join NATO. NATO would agree not to accept it, and there may be some room for security guarantees. This feels extremely early, unclear, and I take it with enormous grains of salt. But at the same time, it is possible that after all these couple years of war, Putin is at least ready to explore some kind of a way out, but I'd be very careful. At this point, this is a war that Ukraine has been very, very, very slowly losing, so I'd be a little careful in assuming that this is going to move in any quick way.
Bloomberg's Kevin Whitelaw says President Biden's decision to allow Ukraine to launch long-range missiles inside Russia could complicate any settlement. And in another development, the U.S. decided to provide Ukraine with anti-personnel landmines. President-elect Trump filling out his cabinet, naming Linda McMahon, his former small business administrator and wrestling executive, as his education secretary. Mehmet Oz from TV's Dr. Oz getting the nod to lead the Centers for Medicare and Medicaid Services. And another launch for Elon Musk's SpaceX.
3, 2, 1.
The company launching its 6th Starship test flight yesterday, South Texas, with its Starship successfully reigniting one of its Raptor engines in space for the first time. Elon Musk attending the launch, standing alongside President-elect Trump, Texas Senator Ted Cruz, and other Republican allies. Well, SpaceX aborted an attempt to steer the booster rocket back to its landing pad and catch it with those 2 mechanical arms, which it accomplished during the 5th Starship test. Instead, the booster landed in the ocean. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom, Paul, and Lisa.
John Tucker, thanks so much. Maeve Sheehy has the privilege of working with Jack Fitzpatrick, Zach Cohen. Maeve's writing up a storm. There's a vote tonight, and it's way beneath the radar. Thank you, Maeve, for this. It's great. Can we get... Cy, can you get Maeve Sheehy on if her date calendar will let us? She doesn't start work till 10 o'clock, but if we can effort Maeve Sheehy, we got to do it. Centrist House Democrats pick leader as they seek more influence.
Oh, okay.
That's completely beneath the radar.
Yeah, I didn't know they were having a vote. Okay.
That's what Bloomberg government does. Reps David Schneider, they jockey.
Okay.
To lead the middle ground for Democrats.
All right, very good. We'll pay
The
attention
pot
to that.
boils.
Yeah, we've got the reporting on that.
It's
Okay.
not even Thanksgiving.
Yep.
Maeve Sheehy, thank you for that. Over to Bloomberg government where's Gura? Is he on a plane?
I have no idea. He could be in the
He's probably still at
Copacabana.
Copacabana.
Right.
Probably at the hotel. From New York City, this is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures advancing after reports that Moscow may be open to negotiations on halting the war along current battle lines. We have NASDAQ futures up 0.2%, 47 points. Dow futures up 0.3%, 136 points. S&P futures up 0.2%, or 12 points. The two-year yield at 4.29%. That's up 1 basis point. The yield on the 10-year 4.42%, and that's up 2 basis points. To commodities, gold. Right now, spot gold just a fraction higher at $2,634 an ounce, but UBS says gold will rally to $2,900 by the end of next year. Over to oil, Brent crude up about 0.5% at $73 a barrel. WTI crude $70 a barrel. Shares of Comcast up more than 1%. Yes, it is official. Comcast says it will spin off its cable TV channels, MSNBC, CNBC, USA, Oxygen E, the Golf Channel, a lot of others, to create this new company called SpinCo. It's news, sports, entertainment, cable TV. Its CEO will be Mark Lazarus, current chairman of NBC Universal Media Group. And I want to check back in with retail earnings very quickly. We have Target shares down 18%, TJX down 1%, Williams-Sonoma up 21%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. We continue with Michael Darda, Roth Capital, this morning. Michael, I want to talk about the Fed, and let's just begin with the beginning idea of a nonlinear move to wherever we're going. Is the Fed restrictive right now?
Boy, Tom, that's the $100 million question. You know, Fed Chair Powell, I think, would admit that they don't really know the answer to that question. I think they're probably still modestly restrictive, but certainly less so than they were before the first 50 basis point rate cut, followed up by 25 basis points, and now markets expect, one more 25 basis point cut. I think we might be close to a potential Fed pause. And the reason I say that is when Fed Chair Powell and company started this cutting effort, what he said was, we don't know where the R-star is, we don't know where neutral is, but we're pretty confident that we're above neutral based on all of the mainstream estimates. That is no longer the case with 75 basis points nominal rate cuts in the bag and a modest bump higher in bond market inflation expectations.
But Michael, what's so important to me, and this goes back to your work with Jude Wieniski right out of Wisconsin Whitewater, is do you aggregate the nation, and can Powell aggregate our policy or witness the election and all the tension? Are there two Americas where the Fed has to somehow make policy around those two Americas?
Yeah, well, the Fed does have to deal with aggregates, inflation, total spending, nominal growth in the economy, the labor market. It can't target sectors. That's not the role of the Federal Reserve. If we're talking about, issues in terms of redistribution and taxation and regulation, that really falls on Congress and elected officials to deal with. And in terms of fiscal policy, the Fed has to just operate with what it's given. And there's a tremendous amount of uncertainty ahead as we move into 2025. The conventional wisdom is that, we're moving into a more accommodative fiscal environment. But for the reasons that we discussed at the opening, Tom, I think that may be incorrect. So, if you go back to the strictures of budget reconciliation, the administration is going to have to find revenue to permanently extend any of these tax cuts. And if that means big tariff increases, and the view is that those are not contractionary and don't hurt the U.S. economy, not my view, but obviously that's the view of the incoming president, you could end up with a substantial fiscal tightening. And so this is a tricky environment for the Fed. If that tightening disrupts the productivity rebound that's underway, that's going to make the Fed's job harder. So, there's a substantial amount of uncertainty going forward.
Michael, there are some market observers that, as they try to parse through President-elect Trump's some of his economic policies, whether it be lower taxes, higher tariffs, that they might be inflationary. Do you share that concern?
Well, it's sort of a hodgepodge, Paul. So, a big jump in tariffs would be equivalent to a relative price shock. So it would tend to push up inflation on a one-time basis and retard real growth. That is not a recurring thing. So it's not a monetary inflation. Typically, central banks would try to look past that. And beyond that, could actually lower the neutral interest rate if it hurts the supply side. So it's not just straightforward in terms of, oh, this might push inflation up. And so, the Fed should tighten monetary policy into that kind of a shock. Yeah. Some of the other proposals may boost the supply side if we're talking about deregulation, if we're talking about other tax changes or tax reforms that can boost efficiency. So I think we're dealing with a bit of a hodgepodge of potential supply side changes and or shocks. And, we're going to have more information and more details to figure out, right, the overriding trend is going to be whether, it's more of a headwind or a tailwind.
Michael, the Fed feels like it's got inflation generally under control. It's focusing on the labor market. What's your view of the U.S. labor market these days?
Well, the U.S. labor market has been hanging in there. Obviously, we got a very weak report for October, and the pattern has been, one in which we've had a fairly gentle deceleration. But I think we're going to need some more data to really come to a decisive conclusion. As we moved into the summer, we were getting signals from the unemployment rate that were very consistent with a business cycle that had stalled or even started to enter recession. Right. And now the unemployment rate has pulled back a few tenths and essentially stabilized. Okay. So there's a big question mark up there.
Right. Michael, thank you so much. And go feed Klaus. Klaus is, he's like, Klaus is vegging. Klaus is the dog. Michael Darda, thank you so much with Roth Capital. Joining us now on the death of Arthur Frommer, who changed how we travel, is surveillance $5 a day correspondent Charles Pellet joining us now. The latest Frommer's Europe from $85 a day. How do you do Paris on $85 a day?
The answer is you don't. What you do is you try to look for a cheap hotel and use mass transportation. And that was Arthur Frommer's entire shtick. He would figure out ways to get around cities just like everyday people, not taking the cabs, not taking the Ubers.
Did you ever meet him?
I did, as a matter of fact. I went back to see if the interview was on the Bloomberg. A colleague did one in 2007, and it was a TV interview way back either in the 90s or early 2000s. And what I remember about the interview with Arthur Frommer, you get some guests, quote unquote, you wind him up, you let him go. That was Arthur Frommer. and it's either good news or bad news, because if they're boring, you don't want to let them keep. But this guy was so captivating. Okay. And just very briefly, and I'm embarrassed to admit, the first I heard of it this morning was from the control room. You and I ran into one another yesterday. Tom Keene, by the way, for our listeners, loves to hold court up on the 6th floor. You walk by, and I swear to God, one day I saw you sitting there with a Federal Reserve president. So you never know who Tom Keene's going to be hanging out with. It's just unbelievable.
One day A-Rod shows up. I'm sitting there with A-Rod talking about why the Red Sox are terrible. Charlie, where are you traveling next?
I'm traveling to Israel over Martin Luther King weekend for a coffee and also for a beer, and I will leave it at that.
Would you go to Jerusalem? Like, you stay at the old colony?
Part of the reason I stayed at the old colony, but part of the reason is I like to take the train system. I like to ride mass transit. I've done that before, but I managed to get a super cheap connecting flight on ITA, which is the successor airline to Alitalia, $750 round trip.
I saw that. I was in Rome, and there it was.
Yeah. And the only thing that's upsetting is I got to do it in a weekend there and back, so I'm not like spending time in Rome.
Wow.
Yeah. Enough out of me. And we got less than a minute to go here. I ran into a guy last night at an event. I'm at Hard Rock Cafe. I run into a guy, says, "Oh, do you know Tom Keene?" I said, "Yeah." He says, "I knew him from Northampton, Massachusetts. The guy knew you from your Bond days up in Boston, and then the music days, and he was telling me about your folk career in Northampton, Massachusetts."
The Iron Horse Cafe.
Yeah, the Iron Horse Cafe.
Leah Kunkel, good morning.
And there I was hanging out with Liberty DeVito, the drummer, with Billy Joel.
Very good.
That's a whole another story. I got to hold court up on the 6th floor.
Charlie, can we come back to your show again?
No, we've got another break coming up in just a moment here.
Charlie Pellet, thank you. So, do you want to take us out, Charlie?
No, because I tell you what, I got to get some coffee. I'm hungover. I had 3 beers last night. Can't do 3 beers on a weeknight. I'm sorry.
Our Europe on $5 a day correspondent. Bonus, he's hungover. Charlie Pellet, thank you. Oh, Charlie, when you get out, stand clear of the closing door, okay? Futures up 14. It's madness. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures on the rise. This is as traders look ahead to Nvidia's results later this afternoon. Shares right now up about 0.5%. We have Nasdaq futures up 0.2%, 47 points. Dow futures up 0.3%, 131 points. S&P futures up 0.2%, or 12 points. We have the 2-year yield at 4.31%. That's up 2 basis points. The yield on the 10-year 4.43%, and that's up 3 basis points. Some more economic data coming in. MBA mortgage applications for last week rose for a second week in a row. Purchases were up, but so was the average 30-year fixed rate, now at 6.9%. Tomorrow, we're on to existing home sales and also initial jobless claims for last week. Few companies making news. Foxconn, one of the largest suppliers for Apple, sources say it's raised $1.1 billion through a 3-year loan. And Qualcomm, expecting its push into new markets to generate an additional $22 billion annual revenue by fiscal 2029. Be sure to tune in here, 11 a.m. Wall Street time. Qualcomm's president will join us live. And Exxon signed a preliminary multi-year deal to provide battery metal lithium to an LG chemical plant in Tennessee. And this just coming across the terminal. Ford plans to cut 4,000 jobs in Europe by the end of 2027. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. I mentioned to Paul earlier, I think it was off the mic, that Ford's inventories, I was shocked.
Yes. Yep.
I don't have it in front of me, but it was a shocking number. We'll have more on that. We'll get some people from Detroit in as we can. Our economic indicators, particularly as we launch into December, brought to you always by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Paul, what time are you speaking today at this AI Mandeep Singh, Anurag, Rana extravaganza? Are you at 4 o'clock, 4:30?
Tom, I'm on the 12:43 train to the Jersey Shore every single day. I don't stay in New York after 12 o'clock.
But you are today.
But for these two guys, Anurag, Rana, Mandeep Singh, I said yes because you have to, because they're the leaders of our technology research at Bloomberg Intelligence. They have this phenomenal conference today. Some of the real leaders, Tom, in his generative AI thing, which I'm trying to learn about, I'm trying to get smart about, but they've got a lot of the leaders in that industry coming to the Bloomberg HQ today.
Yeah, Wayne Barlow getting it started, global head of core product, like a real job at Bloomberg, unlike what Paul and I do. This is going to be a great panel, except at 4:30, everybody's going to turn to their cell phones and ignore moi or Matt Miller because they're going to be looking at Nvidia in the same room together for the first time since Nixon was president. Mandeep Singh and Anurag Rana. What do you guys see each other like? What, twice a year? Is it that rare?
No. We see each other far more than that, but we talk at least 3 to 4 times a day.
Yeah. What are you talking about right now? What is the conversation within the madness of technology right now?
The Nvidia print. I mean, it has to be, right? It's reporting tonight, and all eyes are on Nvidia. And that's what the theme of our conference is, just to connect the dots in terms of what is the flow through when it comes to companies that are buying these GPUs. What are the use cases that are emerging? And is it really living up to the productivity promise? That's the theme of the
Do we know that,
summit.
Anurag? Do we know that yet?
It is too soon, and that's what we've been talking about. Right now, the whole buzz is expand the infrastructure. But today we're going to ask these executives, tell us the use cases of these productivity, because then the audience can gauge whether some of these use cases are worth the investment or not. Like, does it save you 10 minutes to write emails? That's not going to drive the needle. It has to be far more than that for people to invest on the software side, on the application side.
Mandeep, is there real concern from the clients, the investors you talk to, that maybe this tech industry is going, the spending is too much too fast? Or is it one of, hey, you guys can spend whatever you want because we think the opportunity is that big?
I mean, everyone agrees on the fact that this is the biggest secular trend that we're seeing, this decade. And clearly, it's got ramifications in terms of disrupting certain industries. No one knows exactly when we'll hit the CapEx digestion phase, and that's what everyone is trying to figure out. What we are doing in this summit is bringing together both the large company perspective as well as the startup perspective. And we've got some really interesting startups at the summit.
How do you guys, Dan DeFrancesco over at Business Insider making a splash 4 or 5 days ago, Microsoft's Copilot's underperformance is the latest red flag for investments in AI. You guys are grizzled pros. I look at that and tremble. Anurag, what do you look at the legitimate worry about, is this going to work out?
I think it's all a matter of how much. It's not so much that this is not going to work. We are already at a phase that the top tech companies are going to spend close to 90 billion extra in a 2-year period compared to what they were before. So now the question is, what is the output of that? Okay, bright guys. What is the, do you realize the easiest course these two guys took in college was harder than anything we took?
Oh, of course, yeah. I'm not going
what's the outcome of this CapEx?
But that's the whole issue. The software and the services companies are saying, or the companies are saying, is it's going to take several years for this to show up in the revenue stream. And all of us are trying to figure out how true it is at this point, because if you don't see that productivity benefit that we are trying to unlock today in our conference, then the companies will say, well, we don't have to spend as much. And that then puts a completely different multiple or compression to all these stocks. And that's what everybody wants to avoid.
So, Mandeep, what are you going to be looking for here from Nvidia after the close here? Dan Ives was out from Wedbush Securities saying he thinks they're going to beat the current revenue by a couple of billion, take the guidance up by a couple of billion. Do you think that could happen? And is that enough for the stock?
Yeah, I mean, clearly investors have become less sensitive to the valuation that this company trades at, because they are so good in terms of, beating their numbers. And look, when it comes to the future of generative AI, if there's one thing that is for sure is NVIDIA is at the heart and center of it. Whether they're going to miss their numbers 3 quarters from now, that will have, an implication for their valuation. But beyond that, I think they just have that lead when it comes to chip makers that is unassailable right now.
Tell us about this word ecosystem. I mean, it's identified with Apple and services and that. Is there I'm speaking with Adobe today. Is there an Adobe ecosystem? Is there a Microsoft ecosystem, Anurag?
Yeah, so that is exactly the argument. What these companies are saying, Adobe is basically arguing that our ecosystem is that strong that no matter if there are open source tools out there that can do something similar
OpenAI or whatever.
Yeah, that's not going to disrupt our business. And there is a bull and bear argument against it. Same argument you can make for other companies such as Salesforce or Workday or Microsoft. Somebody is saying, well, I can just use OpenAI and do my work. Why do I need to need this packaged software industry? And that is the push and pull at this point.
So, Mandeep, what's the next thing for AI, do you think? I mean, what are some of these startups that are going to come to your conference today? What's kind of the next iteration of it, I guess?
I'm sure they're going to give us the message. They want some of this profit pool that NVIDIA has. And even if you get a small slice of, this large addressable market that everyone believes is there in data centers, these companies could, have a very successful IPO down the line.
Matt from an office upstairs is fancier than mine emails in and says, where's the copyright protection for all the intellectual capital these animals like Anurag Rana and Mandeep Singh are stealing from us? Well, how's this going to work out? I mean, how are they going to pay the New York Times or the Times of London, Mandeep?
Yeah, we have a company called Runway that's in that lineup today. which does, video rendering based on prompts, and they are training their models based on all the content, the content that's out there when it comes to, Hollywood and stuff like that. And they're actually using it. And we'll discuss exactly what you just mentioned in terms of what are they licensing, what is their own IP versus...
Is journalism going to get paid, Anurag? Come on.
So Adobe is making that argument that come work with us because we are training the models on the data we own or the assets that are part of a company. So you're not going to get sued because you're using AI generated from that trained model. And that is going to be a pitch.
Come on, let me cut to the chase. So these two movies out, what are they? Gladiator,
Wicked.
Mandeep can see both of them before we do. Okay, there's two movies out. Variety does some stuff. AI steals the content for Variety. How does Variety get paid?
Well, so in this case, clearly, they will have to license some of the content where they're, the same actors are being used or the same setup is being used. But beyond that, AI doesn't really replicate your content. And that's what I think these models are showing is, the scene that you're generating isn't an exact replica of what has been used in the past.
Do you buy this, Paul?
I don't know, but hopefully we're gonna get smarter here today. My panel was right before cocktails. That's a dangerous place
That's
to be.
a dangerous place to be.
Exactly.
My word.
Yes.
You're brave.
I know.
My people just know to say no to that time frame.
Exactly.
Are you kidding? Your
No.
panels before cocktails?
Yeah, they threw me to the lions.
Okay,
So,
I'm after lunch where they're already asleep when I
Right.
walk in. Can you get tickets to this thing or is it sold out?
It's at this point, it's virtual only for anybody trying to join in because we don't have capacity now.
But it will be on the terminal. It will be streamed live on the terminal.
Live Go, probably.
Live Go.
Live Go for
really?
the terminal.
Yeah, it's
Okay,
like
look
Taylor
at that.
Swift.
Yeah, look at that. Exactly.
Mandeep Singh,
Some
Anurag,
merch
Rana,
up
thank
there
you.
as
So
well.
let's do this more often. I know you guys aren't in speaking terms, but let's do it more often. We're all on the big tech. Nvidia this afternoon with Carol and Tim. Futures up 7 with our news in New York City. John Tucker.
All right, gentlemen. Vladimir Putin willing to talk with President-elect Donald Trump about a ceasefire deal in Ukraine that could roughly freeze the war along the current front lines. Let's get more in this report from Bloomberg's Oliver Crook.
There's room for negotiation over carve-outs over the 4 regions of Donetsk, Luhansk, Zaporizhia, and Kherson, and that we also know that they're open to withdrawing potentially. So this is the Russians talking about potentially withdrawing from small patches of territory in other parts of Ukraine. Now, another point that Putin will insist on, is that Ukraine abandon its ambitions to join NATO. Again, this is potentially closer to a wish list from what the Russian side wants, but it is significant because if it is accurate, this is some of the first sort of concrete sketches we have heard from the Russian point and potentially a sort of opening negotiation discussion.
Bloomberg's Oliver Crook says President Biden's decision to allow Ukraine to use long-range missiles inside Russia could complicate any settlement. President-elect Trump has added 3 more big names to his cabinet, tapping Cantor Fitzgerald CEO Howard Lutnick as Commerce Secretary. Linda McMahon, the former World Wrestling Entertainment CEO and Small Business Administrator in the first Trump administration, is the president-elect's choice to lead the Education Department. And Trump has named Mehmet Oz, the celebrity doctor, to lead the Centers for Medicare and Medicaid Services. More on that pick from Bloomberg's Wendy Benjaminson in Washington.
He was a professor of medicine at Columbia University, but he has spent a good deal of his career in the last 10 years promoting, sort of fringe medical things, a lot of wellness stuff that isn't quite, on the beam with a lot of the medical community.
Bloomberg's Wendy Benjamin reporting President-elect Trump wants Dr. Oz to work with his Health and Human Services nominee, Robert F. Kennedy Jr., to reshape the federal health system. As for the Treasury choice, President-elect Trump working to get that back on track. A source is telling Bloomberg News he is holding interviews today with 2 of the top contenders, former Fed Governor Kevin Warsh and Apollo Global Management CEO Mark Rowan. Another potential candidate, Tennessee Senator Bill Hagerty, spent much of yesterday with Trump. A wallet hub out with the best places to shop on Black Friday. Looking for those steals and deals. They say JCPenney is the #1 place to head that day because it's offering an average discount of 75%. This is according to Wallet Hub. Macy's follows behind, saving you an average 57% on all the things you don't need. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Tom Paul.
I was going to do Swanson TV dinners for Thanksgiving. I thought, that would be good. But I had no idea how late Thanksgiving is this year.
Is it?
It's not the moon. Somebody at home said, "Is it the moon like Easter?" And I said, "No, it's the fourth Thursday of November." And because the first is a Friday, Black Friday is November 29th.
All right. So it's a
short 26 days
holiday
to
shopping
Christmas,
season. Okay.
I guess. Yeah, it's like,
Did you get your bespoke tree yet ordered?
No. Actually, that went through my brain this morning that we may have to sell or lease back one of the dogs to pay for the bespoke tree.
Okay.
It's a charity effort.
Yep. Okay.
I think we may go smaller this year, though. Last year I went 15 feet. Oof. I'm there with a guy from Citadel looking at a 15-foot tree. Not this year. I think we'll go 8 feet this year. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures still advancing. This is after Russia said it's ready to talk with President-elect Donald Trump about a potential ceasefire with Ukraine. Traders also monitoring Trump's administration picks. We have NASDAQ futures up 0.1%, 28 points. Dow futures up 0.2%, 88 points. S&P futures up 0.1% or 6 points. We have the 2-year yield at 4.31%. That's up 2 basis points. The yield on the 10-year 4.43%, and that's up 3 basis points. To currencies, we have the Bloomberg dollar spot index up 0.3%. Japanese yen weaker, euro, British pound weaker, with Bitcoin now up more than 2% at 94,410. Few companies making news. We told you about this before. Ford wants to cut 4,000 jobs in Europe by 2027. It's part of this restructuring. It also wants to adjust the production of the new Explorer and the Capri. And labor leaders at Volkswagen, where they offered a £1.5 billion in additional cost cuts. That's to avoid those factory closures. That includes lowering shareholder dividends and also suspending portions of bonuses. And finally, Salesforce planning to cut workers at OWN. That's the data management startup it acquired for about $2 billion. That is your Bloomberg Business Flash. Paul and Tom.
Okay, this is what we do here. This is the way we roll. Paul, I'm going from the election day of BitDog under 70,000, and I'm running a regression. Log regression. We're doing that for Lazzetti. Lazzetti would walk out of the studio if I didn't do a log regression. We get to 100. Are you ready for this, Paul? You can only do this on a Bloomberg terminal. I hope Tom Secunda's listening. We get to 100,000 on a log extrapolation November 22nd-ish.
Ish.
That's the trend we're on right
We're
now.
on the 20th today.
Do you have a stop? You have a stop loss in a sell order?
I'm letting it ride. Just letting it ride.
Oh, you're letting it ride.
It's my fun money.
Bloomberg Surveillance this morning. We're brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. When we invented Bloomberg Surveillance, I said the power is a really good guest, and then right after, or a couple guests after, another really good guest. To go from Michael Darda to Matt Lazzetti is what this is all about. Lazzetti of Deutsche Bank, holding court over there. It's a Time Warner Center, except Lazzetti demanded that they rename it.
It's a lot better name.
Same question.
Deutsche Bank Center.
Yeah.
Deutsche Bank Center. There you go.
There you go. Same question I asked Darda. Are we restrictive right now?
In terms of monetary policy, I think we're maybe modestly restrictive, but as you see how the economy is responding, you have a very resilient labor market at the moment. You have a consumer that continues to spend. You have inflation that seems to be stalling out at too high levels, and financial conditions as we see them evolve. Equity prices near record high levels, credit spreads that are very tight. Financial conditions that are pretty easy. So I do think it's an environment where the Fed is right to say that they're restrictive, but they're probably not going to be able to cut all that much.
So you and Peter Hooper are chatting it up over a glass of Tang, and the bottom line is, do you aggregate, which is what Powell has to do, or off the election, are there two Americas, or for one America, the Fed's restrictive, and for another America having a hell of a good time, they're accommodative?
I think that's probably right. I mean, if you look at homeowners who had locked in a mortgage ahead of the Fed's aggressive rate hiking cycle, they have experienced equity gains in their house, and if you're an asset holder, you've seen pretty substantial wealth gains as well. And so for those households, financing conditions are easy. Financial conditions are easy. They probably don't have to borrow at very elevated interest rates. And so for them, consumer spending continues to kind of chug along. Whereas for the bottom half of the income distribution, it's a much different and more difficult story.
All right, you have a 10-page report out on the Trump presidency, what it means for the economy. And I note that 6 of those pages are disclosures and all that legal garbage. Too many lawyers in the research business. What is your takeaway from a red sweep, to use a term? What does it mean for the economy in your mind?
Sure. So I think there's a few things. One, there's a lot of uncertainty right now because we don't know exactly the sequencing between tax and trade policy and then the parameters around those things. So we have to make kind of key assumptions around those. 2, we think ultimately it will lift growth next year. So we talked about growth being closer to the 2.5% range, maybe even a little bit above that, rather than 2.2%. I think 3, these policies will be inflationary. Stronger growth, the potential tax cuts that we're going to get on top of that, and then adverse supply shocks, particularly coming from trade policy and tariffs, will lift inflation next year. I think a key takeaway from our perspective. Into the high 2% range rather than going down to 2%, but stalling out between 2.5% and 3%. And for the Fed, I think that means that they keep rates above 4% through 2026.
Okay, because I was going to say, what are we going to hear from the Fed, in the next couple of meetings here? I mean, did they take into account what they think might happen with the new administration?
Yeah, so I think that's where you hear some tension in their discussions at the moment. I think Fed officials are saying until they kind of get clarity on what those policies might be, they really can't factor it into their own discussions. But there's kind of an interesting, if you go back historically, in December 2016, so a very similar period, we just had the Trump election happen for the first time. There was this massive uptick in the discussion at the Fed minutes and transcripts about fiscal policy. So they were mentioned fiscal policy 17 times in November 2016, 212 times in December. And the Fed staff built in tax cuts. The Fed staff increased their estimates of neutral. And every Fed official said that it imparted upside risks to their growth outlook. So I do think that even if they're not building in these policies because they don't have the details, it will factor into policy decisions as we look at it.
One final question. One of the high points of my act in doing this was to interview, I believe it was twice, Axel Leonovic, who was iconic at your UCLA. And he was the one in the 60s who talked about coming out of the trenches on monetary research against the Keynesian onslaught. Where's the underlying theory of the Trump economics? Is it a Keynesian build out of just massive fiscal policy? Is it some form of Friedman conservative? I can't glean a theory a la the courage of Axel Leonovid in the late 60s. What's the theory of Trump economics?
Yeah, so I think, if I look at Trump and if you read Lighthizer book, the underlying...
I've got it in yesterday.
No trade is free.
Yeah.
I mean, the underlying thread there is very clearly that essentially for the past 30 years, so going back to the mid-1990s, trade policy shifted in a very kind of free trade and liberal direction in a way that you had not seen in the previous decades. And what came about of that was kind of a hollowing out of manufacturing base in the U.S. economy, a hollowing out of kind of the middle skill distribution jobs, and one that led to lower real income growth. And Lighthizer highlights a chart which is absolutely fascinating. If you look at real median income for households, it was essentially flat from the late 1990s to 2015. No growth over that period. And that coincided with a lot of the political developments that we've seen. So I think that's the underlying Fed. I wouldn't kind of look at it as kind of Keynesian or a monetarist
Okay, but so
view.
is the distinction the magnitude of the tariffs, where they're sort of tariffs light, or what Trump campaigned on? Is that the distinction?
So I think as we look ahead, we should, as you read that book and as you look at how Trump has talked about this, we should anticipate that tariffs and trade wars are coming. The bid ask, or kind of the questions, are about the sequencing and the parameters around that. Do they phase it in as we look ahead? Do they take a maximalist approach? Our bias would be towards them doing it somewhat similar to what they did last time, which was phasing it in over time. But we do anticipate that they do get tariffs, they do get trade wars.
Is that net positive, net negative for this economy, do you think?
So over the short run, I think it's net negative. Okay. And we saw this in 2019. In 2019, industrial production and manufacturing production were down, not up. Manufacturing employment had been strong and actually flatlined. Isn't manufacturing sentiment had also, global trade flows had kind of contracted. So all those things, I think in the short term, were definitely negative.
Matt Luzetti, thank you so much. Really, really appreciate it. We mentioned Northampton. Who mentioned Northampton? Charlie Pellett?
Yeah.
Mentioned Northampton, Massachusetts.
Yeah.
I mentioned the Iron Horse Cafe. We got a nice response to that. It's still going.
All right.
It's like, a venue and all that, and crunchy granola. Everything's gluten-free. Okay. And in honor of the Iron Horse Cafe, I mean, what do you play from a long time ago?
Tom Petty?
No, not Tom Petty.
No?
I mean, he probably went to the Iron Horse, but he was just hanging out, maybe did one song.
Interesting, okay.
You play Poussette Dart. I mean, you play John Poussette Dart. Lisa's going to who?
Lisa who?
Richard
Help me out here.
Poussette Dart was a world-class painter, and his son picked up a Stratocaster. Then it's as simple as that.
Okay.
So you play John Poussette Dart, County Line. Good morning, Boston, 92.9 FM, and nationwide on your commute.
Across that county line.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
Have we achieved the soft landing? Has the Fed kind of done its job?
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Fears over a broader regional war in the Middle East.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr. With the Detroit Lions, he's having a lot of fun. I mean, you know, it's like they're like the number one team in football now. I see him in all the ratings.
Well, we now know why.
Kansas
Michael
City
Barr
lost.
worked.
I watched the end of Buffalo and Kansas City.
Yeah.
It's exciting.
Two great quarterbacks. That was exciting.
Yeah, the Buffaloes did it.
Boy,
Lisa,
New York, could they use a quarterback? Just the city of New York.
why?
Any team.
Okay,
Either team.
one more time. Let's go to Sweeney, who's been a season ticket holder since time began. Why does New York football, is it because they're in New Jersey?
I don't know. I don't know. Generally, the Giants are considered a good franchise ownership in the NFL, but they've been terrible for a long time.
Yeah.
And the Jets are just the Jets. And all my Jets friends, they just say,
Yeah.
it's the Jets.
We're going to do this quickly here. Lisa Mateo with us. Of course, we'll get to the Bloomberg Business Flash. Jim Bianco on deck. And so we're going to rush through this to get to Mr. Bianco, Chicago-based. Bloomberg Surveillance this morning is brought to you by BNY. BNY's expertise and insights can help clients achieve their ambitions. Visit BNY.com. Thank you to BNY. Jeff, you in the other day. I thought was really quite good.
He's awesome.
He was, he cross-correlates. And
Yep.
As Lisa does that as well. She cross-correlates as well. Futures deteriorate. Up 10 earlier, up 4 right now. Mixed retail bag. From the Interactive Broker Studios, our Bloomberg Business Flash. Lisa Mateo.
And we've got futures pointing to a higher open. This is as Wall Street kind of recovers from that round of volatility after the escalation in Russia's war against Ukraine. We have NASDAQ futures up 14 points, Dow futures up 73 points, S&P futures up about 4. We have the 2-year yield at 4.31%. That's up 2 basis points. The yield on the 10-year, 4.43%, and that's up 3 basis points. To currencies, we have the Bloomberg Dollar Spot Index up 0.3%. We have the Japanese yen weaker, down about 0.6% at 155.73 against the dollar. The euro, British pound weaker. We have Bitcoin up 2%. Listen to this, at 94,345. You're welcome. On the earnings front, the attention turning to Nvidia reporting after the close. Shares right now up about 0.5%, and retail, a big part of the earnings before the bell. We had targeted shares down 16%, trim full-year earnings outlook, build up in inventory, but they still remain optimistic about the holiday. They say they plan to cut prices on 2,000 products for the holidays sale.
Yes.
TJX, owner of Home Goods, TJ Maxx, Marshalls, they raised third quarter earnings, topped estimates. That was thanks to higher shopper visits from its, quote, treasure hunt shopping experience, but its shares down about 2%. And Williams-Sonoma, its shares soaring up 26%, raise its full-year outlook. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, great. Oliver Chen just reporting on Target. Walmart's his number one choice on Target. He's got a hold. And Lisa, help me and Paul. Discretionary pressures amidst a choiceful consumer. Are you a choiceful consumer?
My family's not, but I'm a very choiceful consumer. Yes, it's about the clothing. A lot of people not getting the clothing that they used to and update their wardrobe as often, so that was a problem for Target.
You and Alex Steele are like the same. You guys are just bargain hunters.
Bargain hunters, I wear the same thing.
Oliver, I emailed Oliver, I said, what in God's name is choiceful? Quote, having, providing, or furnishing with many choices, or making decisions and choices thoughtfully.
All right.
What a perfect segue into James Bianco. Jim Bianco joins us from Bianco Research. I want to make this clear. I announced Lindsay Pieggs as my Economist of the Year, and I mentioned in it, Jim Bianco led the way. He's the one who first said, maybe rates aren't going to come back to where John Williams wants them. And Jim Bianco joins us this morning. I assume, Jim Bianco, it's a choiceful Fed. They're making decisions thoughtfully. How data dependent is our choiceful Fed?
Well, hopefully they're very data dependent, because the data, I think, is telling them that they should not be cutting rates in December. And I'll even go you one step further. If they don't cut rates in December, there's a reasonable chance that the rate cutting campaign ended in November. That's because the economy's doing fine. Inflation has now had 43 months in a row where core CPI has been above 3%. I don't know where this soft landing talk is coming from, because we're not having anything like a soft landing. We're having a no landing. And now we've elected Donald Trump, and we're looking at massive fiscal stimulus. We don't need the Fed to be cutting interest rates in this environment. The stock market's at an all-time high. Bitcoin's pushing 100,000. Financial markets are not having a problem with the current level of interest rates. So the Fed,
adding to all of this by continuing to stimulate with cutting interest rates is just going to foster more inflation. And that's why I think if they were data dependent and they were looking at the strong data that we've been seeing, the sticky inflation that we've been seeing, the ebullient markets that we've been seeing, they'd back off on these rate cuts. And I hope that's what they do.
Isn't the bond market kind of already telling us that, Jim? Because we've seen rates rise pretty substantially here, despite the fact that we do have the Fed cutting rates.
Yeah, it is. We were at 3.6% the day before the Fed started cutting rates in September. We're at 4.4% right now, so that's an 0.8% rise. That's the biggest rise after the Fed started cutting rates in at least 40 years. But prior to that, it's kind of hard to figure out what was the date they started. But it's been many decades since we've seen interest rates go up like this. I think that's a message that the bond market's sending to the Fed that these rate cuts are not needed. Now, Jay Powell was asked about that at his press conference, and he said, well, we don't know what the bond market's telling us why rates are going up. Maybe they go back down and it doesn't matter. And then Austin Goolsbee was asked the same question, the Chicago Fed president, and he said, the Fed has to figure it out, is what he said. So it's telling them what they want. They just don't want to hear it right now because they seem to be in this mode that they want to cut rates.
If we get a Bianco nominal GDP, dare I say, Jim, a run rate above 5%, is that harmful to our listeners and viewers?
No, it shouldn't be. There's a perception in the world that rising interest rates are bad, falling interest rates are good. Rising interest rates not necessarily bad. If the economy is growing at a fast nominal rate like 5%, then that's where they should be, is at 5 or 6%. And that is in an environment where businesses can be profitable, stock markets can go up, people can get employed, even though you have 5 or 6% interest rates. And those retirees and pensioners that are looking for fixed income could actually get a fixed income. So it's not necessarily a bad thing if we have a strong nominal growth environment and we have higher rates. If you get higher rates because of purely inflation, that's a problem. But higher is not always bad.
Are you concerned about inflation maybe getting a little bit out of control if this administration pushes through with rate cuts, with tariffs and the like? Is that a concern?
Yeah, it's very much a concern that, we're not going to hit that 2% target, that inflation might be bottoming. I'll use that core CPI number again, somewhere around 3. It might start drifting higher, and the key word there is drift. Wow. It's not going to go massively higher. And that is going to then, put put a little bit more pressure on the bond market. But nevertheless, I don't think it should be something that should be concerning to the point that we need to have drastic action in financial markets. I think what we need to do is understand that we're no longer in that period before 2019 when we were always below 2% on inflation. That cycle ended with COVID, and we're now in a post-COVID environment, and that post-COVID environment has a little bit higher inflation.
Jim, the Fed is focused on the labor market. How do you view the labor market?
The labor market has got two things going on with it. One, the data in the labor market is not too bad. The unemployment rate is still very low, 4.1%. The jobs growth numbers are still pretty good. Yes, I remember that we had 10,000 jobs because of weather and the hurricanes, and we'll see if that gets revised higher on the next number. But also keep in mind that there's been a massive change in the labor market. Work from home. In 2019, before COVID, maybe 5% of the workforce was remote. And today, it's more like 30% of the workforce is remote. So we have a completely different workforce. We have a completely different way that we work, especially in service sector jobs. And that needs to be factored in. And if you're just viewing the world like you did pre-2019, you're kind of missing the point that the labor market has changed. And because it's changed, I think when you start looking at it, you start realizing it's not nearly as dire as a lot of Cassandras make it out to be.
Okay, so off Atlanta GDP now, are you saying there's a productivity adjustment that gets you out to, dare I say, 3.5% real GDP run rate?
There very well could be. I mean, Atlanta Fed is at 2.6. There's always been a problem with the productivity numbers that, remember, productivity is just take the total amount of money we spend on labor, divide it by GDP, and that's what you get for productivity. But the problem there is that, are we properly measuring GDP? Are we properly measuring technology and the technology improvements that we have? And that's why the productivity numbers have been a source of contention for decades now, whether or not we're measuring it properly. I think we're not measuring it properly, and we're probably a little bit more productive than we think we are. That should be a good thing for the inflation rate. It is. But I also think we're also in a post-COVID environment where we're in a higher run rate for inflation to begin with.
Jim, just absolutely brilliant and lonely 2 years ago saying inflation's not going to come down in a 2-ish level. In hindsight, Bianco at rules. Jim Bianco with us this morning. Futures up 3, the VIX 16.21. With our news in New York City, John Tucker.
All right, Tom, Paul, and Lisa, new developments in the Russia-Ukraine war. Reuters reporting Vladimir Putin willing to talk with President-elect Donald Trump about a ceasefire deal in Ukraine that could roughly freeze the war along the current front lines. President-elect Donald Trump's search for a Treasury Secretary continues as he's scheduled to hold interviews today with the former Federal Reserve Governor Kevin Warsh and Apollo Global Management's Mark Rowan. Senator Bill Hagerty, a Tennessee Republican, also a potential contender for a cabinet-level position, spent much of yesterday with Trump flying aboard the president-elect's plane to a SpaceX rocket launch in Texas. Florida Republican Matt Gaetz nominated to serve as Attorney General of the United States, but there's a House ethics probe that today is considering whether to release its findings into his conduct. Let's get more on that story from Washington and Bloomberg's Amy Morris.
Senators in both parties are requesting more information on the House ethics probe of Gaetz ahead of his confirmation process. Gaetz has denied any wrongdoing, and Axios reports Donald Trump has been personally appealing to senators to support the nominee. The House Ethics Committee, which is under pressure to release its findings, plans to meet today. Republican House Speaker Mike Johnson has urged the panel to keep its findings confidential. The Justice Department investigated allegations that Gaetz had sex with a minor in exchange for money, but then decided in February of 2023 to not file any charges against him. In Washington, Amy Morris, Bloomberg Radio.
And sentencing today for Arkega's Capital Management founder Bill Wong. Prosecutors have recommended the 60-year-old spend more than 2 decades behind bars for the fraud and market manipulation tied to the stunning 2021 collapse of his $36 billion family office. The implosion contributing to the demise of one of the biggest names in finance, Credit Suisse Group. Global news, 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Tom, Paul, and Lisa.
John, thanks so much. Dana Telsey riding on the short season here. I mean, retail's really focused on move it or lose it.
Yeah.
I mean, I had no idea.
Yeah, we'll see how promotional these retailers will be during, the holiday selling season.
John, are you up Friday morning at 4 a.m. to, get in the store?
I will be here with Paul, actually, right?
That's right. Absolutely.
2 of us together.
Black Friday coverage?
Yeah, we'll be all over
total.
it.
Our team's all out over the metropolitan area. All
So
one
much,
of us.
so much excitement.
We'll do a remote from Macy's.
Good morning across the nation to an exciting show. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And And this futures report sponsored by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indices, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. All right, we still got futures advancing. This is after reports Moscow may be open to negotiations, halting the war along battle lines. Right now, NASDAQ futures, a little change up about 6 points. We have Dow futures up 67 points, S&P futures up 3. We have the 2-year yield at 4.31%. That's up 2 basis points. The yield on the 10-year 4.43%, and that's up 3 basis points. To commodities, we have spot gold higher at $2,636 an ounce, and UBS, well, they say they expect gold to rally to $2,900 by the end of next year. As far as oil, Brent crude up 0.7%, $73 a barrel. WTI crude $70 a barrel. Shares of Comcast, they're up more than 1%. It announced it's going to spin off those cable TV channels, including MSNBC, CNBC, and also USA. A lot more to create a new company called Spimco. It's news, sports, entertainment, cable TV business. And Tesla stock really been on a ride since the election. Well, one person who reaped those rewards is its chair, Robin Denholm. Sold $35 million of share in that post-election surge. And finally, Ford plans to cut 4,000 jobs in Europe by 2027. It's part of a restructuring plan. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Hey, Lisa, thanks so much. Out on YouTube, subscribe to Bloomberg Podcast, as Lisa mentions there. Also out on YouTube Podcast as well. All of Odd Lots is out there. Tracy, they did a chicken show.
Well,
we had them
I
in
know.
there talking about their full chicken show as well. On your commute, Apple CarPlay, Android Auto, good morning. 92.9 FM in Boston. Thrilled you're with us, and thrilled that from Boston, Vishal Kanduja is with us, head of broad markets, fixed income at Morgan Stanley, at Eaton Vance, and of course all sorts of Boston platforms over the year. Broad markets is high grade. So as a habit, I look at Apple just because everybody knows Apple. I got a 36-year Apple piece. It's gone down in price. It was trading at par, and I'm enjoying it this morning at 60.
What?
Retail gets hammered on duration, don't they? How far out can you go in high grade without being a yield hog, without being a pig where you go from 100 to 60 on a bond?
Good morning. I would avoid anything beyond the 10-year. I think in high-grade sector, I think that's how our positions are reflected right now in the portfolio as well. Spreads in high grade, again, are trading to very close to the top deciles of long-term averages, and rightfully so. Balance sheets are very, very strong coming out of COVID, and even now, growth has been fantastic. All these balance sheets have refinanced their debt to very low coupons and very long maturities. So fundamentally, we are in a fantastic spot for these balance sheets. Technically, also, I think flows into fixed income have done really, really well. Valuations is where we push back. So high grade is an underweight, primarily coming from longer end of the high grade market. But then some technical term, we are duration times spread, we are overweight, and contribution to spread duration, we are underweight in high grade.
All right, so I'm a Morgan Stanley, Goldman Sachs, JP Morgan, fixed income salesman. I'm bringing investment grade deals to the market like hand over fist over the last few months. Am I even calling you guys?
Calling, but they know that we are very picky. So I think we are not buying. No, I think the fun. There are a lot of fun deals and a lot of deals that we are still participating in. Idiosyncratic ones that are coming out. Financials, we are still participating in a lot of deals, both here in the U.S. as well as in Euro IG or IG denominated in euros. There, I think looks slightly cheaper to us versus the U.S. dollar denominated IG. So financials are still an overweight, and they know that we'll be their first call in that sector.
Interesting. I'll keep that note. I've got the yield on the 10-year Treasury, 4.4%. It was 3.6%, as Tom would say a cup of coffee ago. Why are yields going up so strong when the Fed is cutting interest rates? I missed that class.
No, very fair point. I think it's literally in a coffee cup. By the end of it, the yields went up. I think 250 basis points of cuts that we had priced in at one point at 360, right before the Fed got 50, and now we are barely up to that 3. I think the data has done really well. I think if you look at any economic surprise indices in the US, I think they've gone from negative 20, 30 to positive 40 to 50 at this point. That just tells you how the data is beating time after time. Rates are low, financial conditions are low, inflation has come down, so rates are expecting.
What Mr. Gorman bought at Eaton Vance were people, and to me it was the things that you invented weren't invented by marketers. There's a lot of that going on, Paul. It was invented by bond adults like you, like tax advantaged and all that. You now are heated, as others are here, that active management in bonds really counts. Explain how you affect active management versus an index fund.
Very fantastically put, by the way, Tom, on that one. I think on a day like today, you can sell or reduce something in your portfolio if you're an active manager and have the flexibility, something that is close to its all-time tights in valuations, non-financials, IG corporates, high-grade corporates. And on the same day, you can turn around and buy something that is higher grade, has good spread duration, full faith and credit of the US Treasury, agency mortgage-backed securities, very close to its all-time wides. So that relative value and flexibility is allowed on a sector level. And then if you go down, probably a lot of dispersion in subsectors and securities that are coming up as well. So you can move away from high-yield bonds, go into bank loans.
The distance, and good morning, 92.9 FM from Mount Katahdin down to Block Island, and all of you across the nation. Vishal Kanduja with us with Morgan Stanley. From Eaton Vance, and I call it the Green Beach, that lovely park there, you look across at Putnam. Paul, you visited every single skyscraper down there. You go up Boylston Street to the land of Daniel Fuss and Loomis Sales. Can you do a Dan Fuss and make a credit quality active management decision now, or is the market too efficient?
Market is efficient, but there are still subsectors and securities have a lot of inefficiencies and a lot of dispersion yet to come. They're already dispersed. Like if you look at double Bs and triple Bs, a lot closer.
Give me a name. Give me an example.
I think bank loans for us generally right now, moving away from high yield bonds is a fantastic example right there. You know, securitized credit is a fantastic example. I think it is less of an index play rather than a name by name play in there.
We have to go to breaking news. I'm sorry, Vishal, we got to do this here on Ukraine. Vishal Kanduja, thank you so much. Head of broad markets at Morgan Stanley. Can I say Eaton Vance without getting in the...
I love Eaton Vance. That's an old school Boston.
Doze Gardner.
Yep.
Way back.
Solid.
Unbelievable.
You know, credit, deep credit.
Did we have fun in Boston?
We did.
should do this more often.
I love Boston.
Especially
when it's not like sleeting or
I'm
something.
lobbying the Federal Reserve Bank of Sarasota.
Oh, yeah.
March 3rd.
We got... Exactly.
Orioles, Red Sox.
That could be us. We could do
that. Could be us.
I know a guy. I'll talk to him.
Lisa Donna, you talk to him. We'll figure it out. Vishal, thank you so much. And please come back again for a longer effort. There's a headline, folks, that on the Bloomberg gets your attention. Ukraine fires United Kingdom Storm Shadow missiles into Russia. We've just seen that. It has moved the market slightly, but nevertheless, we were green on the screen. We pulled back from SPX plus 10, plus 15. We're on -5 on Standard & Poor's 500. VIX moves out. VIX moves out 16.4 to a 16.72. Paul, I'm looking for the yield here. Not in yet. Maybe we'll see that. But moments ago, not a United States missile, but a United Kingdom Storm Shadow missile into Russia. These headlines are distressing.
They are, and you know,
as long as we've been doing this, we haven't seen this.
No, and what we've heard from some of the experts on this, Tom, just in the last couple of days, is perhaps it's both sides, Russia and Ukraine, kind of making some last-minute attempts to improve their position with the expectation that President-elect Donald Trump is going to kind of force both sides to come to the table at some point.
It is a Franco-British, French-British, low observable long-range missile. I don't have the speed of it right now. It's a more recent missile than what we've seen. The one from Ling Temco Vote is like 40 years old from the United States. This is maybe a little more modern. We'll have much more on this and look to balance of power at 12 noon on the geopolitics of the moment, both in continental Europe and also in the United States. On your morning commute, at your office, at home, YouTube, this is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this opening bell report brought to you by JP Morgan Asset Management. Stay informed on today's fastest growing investment vehicle with the new guide to ETFs. Visit jpmorgan.com/ETF insights to learn more. All right, we've had a ton of retail earnings for investors to look through this morning. Also, let's not forget about Nvidia after the close. And then we got the news, geopolitical tension stepping up just a bit. Ukraine fires UK Storm Shadow missiles into Russia. So let's see how all of this plays out for Wednesday trading. We'll start with the S&P 500 right now, down just a fraction at 5,916. The Dow up about 0.1%, 46 points at 43,312. The NASDAQ down 0.1%, 20 points at 18,966. We have the 2-year yield at 4.31%. That's up 2 basis points. The yield on the 10-year 4.43%, and that's up about 2 basis points. To currencies, we had the Bloomberg Dollar Spot Index up 0.4%. Japanese yen down 0.6%. Euro, British pound weaker. We have Bitcoin up more than 2% at 94,507. At the open, also want to check in with retail earnings. Let's break it down. We have Target down 17%. TJX up 0.5%. Williams-Sonoma up about 25%. And Nvidia right now, their shares are down about 0.5%. That is your Bloomberg opening bell report. Paul and Tom.
Lisa, thanks so much. This is a joy. Like the year end is rushing on us. Paul, I'm sorry, I'm not ready.
No.
It's like November 15th and we're like 18, 19 and it's a holiday shortened season and Thanksgiving's late. And it's like, okay, we're beginning to look to the new year. So we dragged in Richard Saperstein that's been doing this since OPCO time ago. And it's, it's managing money. We really don't do this much, but we're making an exception with Treasury Partners, Richard Saperstein. I got to do an audible right at the top. What are you telling high net worth about Bitcoin?
We really don't get involved with Bitcoin or cryptocurrencies. We're really focused on core investing in stocks and bonds.
You sound like your general counsel. Okay, fine. You've been doing this since time began.
Yeah.
What is your observation on a thing that Gensler put out there with SEC that does not have an underlying value?
It's really hard to compute how we can put it into an investment portfolio and model it and get anything out of it. So we're focused on growing capital. Return on capital is less important than the return of capital.
Right.
So with that in mind, the volatility of a crypto and valuing a crypto is just not something we're doing.
Right now, they come in, maybe they own a lot of Mag 7, whatever, high net worth family, the kids are squabbling, the grandparents, there's a divorce somewhere in that. Are you shaking your head?
There's always something in my world.
In your world, it's nuts, and there's always people. The will's bad, the trust is bad, and that. What's the biggest mistake high net worth makes?
They're underinvested in large cap tech. They have forgotten the value of municipal bonds. Because remember, we had a 15-year period with a zero interest rate environment. So now rates went from ankle deep to knee deep, and you actually have yield in the municipal bond market. So investors can earn 4%.
You're talking the Sweeney gospel here.
Well,
big municipal holder.
Okay, so you can get 4% tax-free in a municipal bond. If you have a targeted return for a client's portfolio of 7%, you can lay down a foundation of 4% tax-free with 40, 50% of the assets. What amount of risk do you have to take on the incremental capital to drive a 7% total return over long periods of time? So that's another thing that's been missing from most clients.
And what I've been surprised talking to a lot of advisors is the demand from their clients for alternatives. I guess private credit, private equity, hedge funds. How do you think about alternatives for your clients?
We're exceptionally underweight versus, quote, the street.
Okay.
They're illiquid, they're not very transparent, and they're very costly. And when you're in an environment where tax rates are only going up, eventually, they're very tax inefficient. So from our perspective, there are other alternative investments, not alternatives, but in stocks and bonds where you can grow capital and manage your risk more appropriately.
So what is kind of are you in the 60-40 kind of camp? How do you think about that for your clients?
It varies based on client risk tolerance. And again, what is our objective for the long-term rate of return? If we want to have drive an 8%, 9% long-term return, we'll have more equity. Otherwise, we'll have more bonds. Depends on clients' risk tolerance and how much vol they want in the portfolio.
Years ago, you were at OpCo. You were probably having Sanka with Myron Picot. I mean, this goes way, way back. I had a physician or surgeon, I can't remember at the time, say, look, all I want is 20% a year. Somebody walks in, high net worth, and they're an equity pig. They just want to make mid-double digit. How do you treat them in high net worth land? Well, you can't tell them 7%.
No, but that's not really an appropriate client for us. And so if you look back 50 years, the average 3-year return of the S&P is 29%. So let's call it 10% a year over the last 50 years. So how is that person going to get 20% a year? Well, they're going to have to leverage up a 10% return asset, okay? And that's just not something we're going to do. It's not a suitable client for us.
All right, let's just talk about just macro stuff. 2 weeks ago today, we woke up with a new president. We now have a decidedly Republican Congress. Did that change your outlook for the discussions you have with your clients?
Not really. I mean, it reduced the uncertainty, but created more uncertainty in many ways. So Trump 2.0 cannot be like Trump 1.0. 10-year Treasury is 200 basis points higher from 245 to 445. The fiscal deficit is 1.9 trillion. The interest on the debt is 1.2 trillion. And the stock market is selling at 22 times earnings. So there's not a lot of running room for flexibility that the markets are going to give him. That being said, certain policies will be pro stock market, certain may not be. So tariffs, they're inflationary, they might impact earnings. So it's very hard to say right now, but we're sticking with our core portfolios and haven't changed anything with the new administration.
You have pushed, again, since OpCo, ancient history, against what now is called wealth management. There's an entire marketed structure out there. We interview people from wealth management each and every day. Compare and contrast what Treasury Partners is doing versus the wealth management industry.
Well, we're trying to provide a 360-degree view of the client's wealth. That includes whether it's the investment planning, the retirement planning, the trust and estates, their charitable giving, and incorporate it all under one roof. And try to have a plan that moves them forward in each of those different segments. Now, all clients aren't going to be appropriate for all of that. Some clients are younger and want to grow their portfolio. Some clients are older and want to make sure they have proper asset estate planning set up. So the wealth planning, the wealth management business as a business has changed for us over the last 40 years.
But we've got this big wealth transfer that I keep reading about from the boomers to the next generations, and like it's dollars that we've never even seen before. Is that primarily an estate planning taxation exercise as opposed to what do I own today?
It's a combination of making sure clients who have over 27 million are set up with slats for tax-free transfer.
What's a slat?
A spousal lifetime asset trust where they can basically take advantage of their lifetime exemptions. It's very important to do that. It is supposed to expire January 1, 26. It probably won't now with the new administration. But to answer your original question, estate planning today is about knowing what you own and setting up to reduce your death taxes going forward.
Is everyone moving to Florida?
I don't know. Ask Ron DeSantis. But I think there's definitely a migration within America from various states to Texas and Florida, and you see that in the fiscal constraints of municipal bond issuers around the country.
Are you buying national bonds, ignoring triple tax-free, fourple tax-free? Or is there really a value, say, in New York State or wherever, California, of the tax advantage?
Clients in a high tax state, we try to position roughly 60 to 70% within the state. We want to have the balance outside the state in case there's a seminal tail risk event. In California, what if there's a major earthquake? What if there's a major attack somewhere? So we want to diversify out of the state to some extent And in many cases, sometimes you can go outside the high tax state and find a bond with a higher after-tax return outside their state.
Richard, thank you so much. Richard Saperstein with us. To say he's with Treasury Partners barely describes how he helped invent the high net worth business. Part of our planning into the end of the year and into 2025. I didn't ask him what his minimum was. You know, I'm looking like, you
exactly. We'll keep working.
$42,000
We'll keep
or
working.
whatever. And I got 10 shares of Apple or triple. He said he doesn't like the triple leveraged all cash.
No?
No.
Not okay.
He says he's not going to, he's not going that path. The red on the screen, again, this important headline, Ukraine fires United Kingdom Storm Shadow missile. It moves the market south. With our news in New York City, here's John Tucker.
Yeah, Tom, there is that news, and also Vladimir Putin willing to talk with President-elect Donald Trump about a ceasefire deal in Ukraine that could roughly freeze the war along current front lines. Let's get more from Bloomberg's Kevin Whitelaw.
There's some new willingness on the part of Putin to at least discuss something where there'd be a carving up of territory that would essentially reflect some of the current battle lines. And in return, Ukraine would basically agree to not join NATO. NATO would agree not to accept it, and there'd be maybe some room for security guarantees. This feels extremely early, unclear, and, I take it with enormous grains of salt. But at the same time, it is possible that after all these couple years of war, Putin is at least ready to explore some kind of a way out, but I'd be very careful. At this point, this is a war that Ukraine has been very, very, very slowly losing, so I'd be a little careful in assuming that this is going to move in any quick way.
And just to repeat that top story that Tom mentioned, Ukraine's armed forces fired British cruise missiles at military targets in Russia for the first time. These strikes used the Storm Shadow missiles. This was approved in response to Russia deploying North Korean troops in the war against Ukraine. President-elect Trump filling out his cabinet. He's named Linda McMahon, his former small business administrator, as the education secretary. Mehmet Oz from TV's Dr. Oz, getting the nod to lead the Centers for Medicare and Medicaid Services. Another launch for Elon Musk's SpaceX.
3, 2, 1.
The company launching its sixth Starship test flight yesterday in South Texas, with the Starship successfully reigniting one of its Raptor engines in space for the first time. Founder Elon Musk attending the launch, standing alongside President-elect Trump, Texas Senator Ted Cruz, and other Republican allies. And the FDA says an inspection of Tom's of Maine's facility in Sanford, Maine, turned up several violations, including bacteria in water used to make toothpaste and a black mold-like substance near manufacturing equipment. A warning letter outlines significant violations, including the discovery of a strain of bacteria that can infect the lungs and blood and can be resistant to medications. Tom's of Maine is owned by Colgate-Palmolive. Global news, 24 hours a day, and whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom Paul, Lisa.
John Tucker, thanks so much. Nvidia this afternoon, I mean, Williams-Sonoma up umpteen %.
Yeah, I saw that. Holy cow.
And Wal-Mart, I guess, leveled out.
Yep.
Target gets hammered. I mean, do we have like a prediction on Nvidia? You're going to be speaking then at the Anurag Rana soiree.
I mean, we see a lot of volatility, as you can imagine, Tom, around a stock that's more than almost tripled here this year, up 190 some odd percent, which is amazing. So you got to expect there's going to be a ton of volatility around this result. Again, Dan Ives from Wedbush Securities out with a tweet yesterday saying that he expects the company to beat estimates this quarter and to raise their guidance relative to where the street already is. So that's the old beat and raise. The question for a lot of folks is, hey, if that does happen, will it be enough for this market?
Has Dan ever been negative? Has he ever said go to cash?
Not that I know of. No, not at all. He's been a perma bull, and for the most part, other than 2022, perma right.
Yeah. We'll have to see. Negative 33 on the market. It is open. That's a Standard & Poor's. The Dow is negative 34. SPX a little less pain. NASDAQ down 0.6%. The VIX now critically over 17.18, showing the geopolitical tension out there. David Gura in transit. We hope to have him on in the next few days. Across America, this is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks, well, feeling the pressure as Ukrainian missiles strike Russia. Right now, we have the Nasdaq down 0.5%, 97 points. The Dow, little change, down 22 points. The S&P 500 down 0.3%, or 20 points. We head over to the two-year yield, 4.30%. That's up 2 basis points. The yield on the 10-year, 4.43%, and that's up 2 basis points. To currencies, the Bloomberg Dollar Spot Index up about 0.4%. We have Japanese yen, euro, British pound weaker. We have Bitcoin climbing to a record for a second day in a row, 94,471. Here's MicroStrategy actually stepping up its purchases of Bitcoin. Its shares of MicroStrategy right now, they are up about 10%. Another stock on the move, web platform company Wix.com. Its shares up 14%, boosted its full-year revenue forecast. And finally, shares of Comcast down a fraction, down about 0.1%. It announced it's going to spin off some of those cable TV channels and create a new company, SpinCo. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Appreciate it this morning. Markets, there's a little bit. I'm sorry, you and Alex. Is she with you 3 days in a row? It's
Sure,
too much.
absolutely. She's back.
10 o'clock,
Thankfully.
and they'll be looking at Bitcoin. By then, it'll be 95,000. I'm kidding. Dollar's stronger here in all. We got a real bond. I love the bondiness today.
I know.
We got a very fixed income. From high above Cayuga's waters, with a really cool economics biology double major, Cornell.
What is that?
With a statistics and genetics. This is
talk about he had no idea what to declare.
This is a guy who did a Graham stain for freshman year. We're thrilled that he can join us. David Rogel is with BlackRock as well. There's 14 people, including Mr. Fink, running for Treasury Secretary. Has the Trump administration called you yet to be the next Treasury Secretary?
I don't think I'm on the list.
You're not on the list.
I'm not aware of that. No.
You're on the list to explain inflation, and you do it through what I look at, which is the 10-year real yield. Which way does the real yield cut in the coming months here at 2.06%?
Yeah, well, thank you for having me. It's great to be here in person, and thanks for having me on the show. I think the real yield in the TIPS market is a good barometer of where valuations have gotten to, which is, I think valuations look pretty attractive. And 2% real yield, you compare that to where we were pre-COVID.
Way down.
You were getting negative 1% on your cash, financial repression. So I think that the 2% level has been a decent buy zone in the TIPS market. And if you think about the way TIPS work too, if inflation's 5%, you're going to get a 7% nominal return. So you're kind of locking that in. And so I think these levels look interesting.
Can you bring real yield enthusiasm over to the full faith and credit nominal space?
I think so. I mean, the inflation expectations in the TIPS market are always, I think, subject to some debate. I think TIPS actually have generally under forecasted inflation. If you have a view that inflation is going to settle in the 2.5% to 3% range, you're looking at reasonably attractive valuations today. In our multi-sector products, you're getting a 6% yield on a pretty high quality portfolio. I think the issue is we've had these incredible narrative swings in the bond market, which you're well aware. We've just been through one where we went from recession, markets pricing recession in July and August. We're pricing policy rates to get to 2.7, 2.8% by the middle of 25. And now we swung totally in the other direction. And I think it's paid generally to fade these extremes. We have certain market participants, I think, taking the market to more extreme levels. And I feel more confident today with a 4% terminal rate saying that you should start wading into fixed income a little bit, moving a little bit out of cash, moving into intermediate. Cash is around 4.5%. And you haven't been able to pick up any yield versus cash really for most of the Treasury curve. We think by the end of Q1, you're going to be picking up yield.
And Paul, what's great about this is BlackRock has $6 trillion of the $7 trillion in cash under management.
Exactly, over the Hudson Yards. How about credit risk? Are you taking credit risk these days? And if so, where are you doing it?
We are taking a very diversified approach. I think objectively, spread valuations in corporate credit look pretty tight. I know last time we spoke, we were kind of talking about this topic, but it's been a pretty good place to allocate on yield. And so I think many investors in corporate credit space are looking at yields and saying it's pretty attractive still. But corporate credit is not a place where we're emphasizing significantly in the portfolio, but we're not underweighted. We're still long high yield. We're favoring intermediate part of the IG market, but we are favoring securitized and mortgages more in our portfolios. And so
mortgage-backed securities, agency-backed securities?
Yeah, we like mortgages. Valuations, in fact, when you look in the last month or so, agency mortgages have underperformed corporate credit pretty sharply. So I think that's an interesting place to look, and we have a pretty significant securitized allocation across a number of different sectors.
What concerns you here? I mean, we've as we think about maybe the new administration coming in with the Republican Congress, there's concerns out there about inflation kind of reigniting, whether it's through tax cuts or tariffs or other policies. A, does that concern you? And B, do you try to hedge yourself around that?
Yeah, it's funny. We finally have certainty on the election.
Yep.
And I would argue there's still a lot of policy uncertainty out there, and there's still so much debate around the impact of some of the potential policy. I think on the inflation front, we have seen a little bit of a stall in progress.
Right.
But I wouldn't say it's all bad. We actually took down our PCE tracking for next month a little bit, based on the composition of the latest inflation data. So I think we're not too worried about goods inflation picking up. Come back to the tariff impact in a second. And we think services inflation is actually starting to improve a little bit.
The fancy stuff you talk about, securitize this, securitize that, can mere mortals buy that, or is it really only available institutionally?
We think that's one of the great advantages of our active platform. We have an incredible number of resources dedicated to looking at those types of markets, which have more complexity, more security selection, more structured risk. And we think it's one of our strategic advantages, from an alpha generation perspective. So it's not something you can get in a vanilla fixed income product. It's something that you really need to go towards an active manager for.
So what do you think our Federal Reserve will do? What are you kind of pricing in here? Because I'm hearing more discussion, not only skipping December, but maybe even just kind of stepping back a little bit here. What do you think?
Yeah, that's definitely the narrative. And again, I think, this is, it's been a while since, if you track the Fed's SEP and you look at those summary of economic projections, you look at the median funds rate forecast. The Fed is forecasting 3 3/8 for the end of next year. For months, a bond market's been trading rich to that, and now we're trading pretty materially cheap to that. So the market's saying the Fed's view of the policy path is wrong. And I think the Fed's forecast on the unemployment rate actually does look too high relative to the improvements we've seen in the last few months. I think we've been saying that this whole time the Fed is on a path towards a recalibration cycle, not a recession-style ease. So what that means is 1 to 1.5% of cuts, get the funds rate to around 4, maybe a little bit below, and then reassess, see where the economy is. So I think there's a high likelihood that they'll continue, get the funds rate down to maybe high 3s, low 4s. But I think there is some concern around that. And you see December is priced at 50% probability of a cut. And there's not even one full cut priced through January. So the market is becoming a little more skeptical.
I want to squeeze this in like 50 seconds or so. Index versus active in your world. Is the alpha in index, or can active actually get it done 3 years, 5 years out?
I think active is the way to go on fixed income. We've shown active has created durable alpha for investors, and the key thing with indices and fixed income today, they're becoming more concentrated. The fiscal deficits, I've talked about this on a couple of other shows, the fiscal deficits have pushed Treasury issuance up relative to other asset classes. 10, 15 years ago, we had a Treasury weight in the index of 20%. Today, it's 45%.
Wow.
90%.
That's fabulous.
Yeah, 90% of the yield in the index is coming from Treasury rates.
Full faith and credit has doubled as a concentration.
In the ag
Wow.
index. Yeah.
David, thank you so much. David Rogo with his portfolio manager, fundamental fixed income at BlackRock as well. Right on the screen, this off Geopolitics, Mr. Putin, and also a United Kingdom missile from Ukraine into Russia. We did have green on the screen. It was a bit fragile, but nevertheless, we're out of stick now on VIX, 17.28. Much more coming up. I'm looking right now. I have to search for it. Bitcoin, 94,500.
Moving.
Team coverage with Alex Steele.
Exactly.
Coming up on that. Paul Sweeney and Alex Steele, look for that. Again, I want to say on your morning commute, thank you for listening, Apple CarPlay. Good morning, Bloomberg 1130 here in New York. And we want to say on YouTube, subscribe to Bloomberg Podcasts. We leave you, Mr. Patty. We had a request. Where's Patty? play some Tom Petty.
Yep.
Tom Petty, good morning.
I was flying.